Assalamu alaikum and a very good morning. On behalf of the Maldives Pension Administration Office, welcome. As we are about to begin, may I kindly request everyone to take their seats. All details, including the agenda of today's forum, is available on our official website, financeforum.mv. For your information, the restrooms are located to the left of this hall. Should you require any assistance throughout the day, our officials will be happy to assist you. We will begin shortly with the recitation of the Quran. Thank you.
بسم الله الرحمن الرحيم بسم الله الرحمن الرحيم الحمد لله رب العالمين الرحمن الرحيم مالك يوم الدين إياك نعبد وإياك نستعين اهدنا الصراط المستقيم صراط الذين أنعمت عليهم غير المغضوب عليهم ولا الضالين
Assalamu alaikum and a very good morning. Assalamu alaikum. On behalf of the Maldives Pension Administration Office, we warmly welcome our distinguished guests to the 12th Maldives Finance Forum. My colleague Ibrahim Rifal and I, Hasina Abdulaziz, will be guiding you through the sessions of today's forum. For your convenience, all details, including the agenda of today's forum, are available on our official website, financeforum.mv. If you need any assistance during the program, our officials are here to help.
The Maldives Finance Forum, hosted annually by the Pension Office since 2012, is a national platform for dialogue, bringing together policymakers, regulators, sector leaders, and experts to discuss key issues, exchange perspectives, and share expertise to advance the development of the financial services and social security sector in the Maldives. This year's theme is Building a Resilient and Inclusive Capital Market. The forum will focus on the strategic role of capital markets in creating a transparent, resilient, and inclusive financial ecosystem, one that mobilizes long-term domestic savings, broadens access to finance, and supports private sector growth as well as contributes to overall economic development. We are confident that the speeches, presentations, and discussions today will provide valuable insights and inspire meaningful discussions for all participants.
This year, the forum is organized in collaboration with the Capital Market Development Authority, CMDA. We extend our sincere gratitude to CMDA for their support in making today's discussions more valuable. To officially commence the forum, we are pleased to invite Chairperson of the Board of the Pension Office, Dr. Ahmed Inas, to deliver the welcome remarks. Ladies and gentlemen, please welcome Dr. Ahmed Inas.
Bismillahirrahmanirrahim. Central Bank, Maldives Monetary Authority Deputy Governor Aishat Asna Hamdi, UNDP Resident Representative Adnan Shima, CEO of the CMDA, Mr. Muhammad Hussein Manik, CEO of the Maldives Pension Office, Ms. Sujata Halim, board members, distinguished members of parliament, delegates from National Pension and Provident Fund of Bhutan, leaders of financial sector, speakers, colleagues, Assalamu alaikum and a very good morning. It is my honor on behalf of the Maldives Pension Office to warmly welcome you to the 12th Annual Maldives Finance Forum. Your presence reflects our shared commitment to strengthen the financial ecosystem of the Maldives. Since its start in 2012, this forum has been a platform for high-level dialogue on the future of financial and social security sectors. Over the years, we have explored themes ranging from financial infrastructure, fintech, to sustainable pensions. This year, we return to a timely theme, building a resilient and inclusive capital market. To appreciate the significance of this theme, let us recall our journey in moving forward. The foundation of the Maldives capital market were laid in 2002 with the establishment of the securities trading floor, a modest yet symbolic beginning that signaled our ambition to create an organized marketplace. In 2004, the Maldives Securities Depository was set up to provide the backbone of settlement and custody infrastructure. Since 1999, Maldives Monetary Authority have been overseeing this development through its capital market section. We are also privileged to see Ms. Shafiqa, who was then heading the section, and I was quite privileged to work under her at that time. A turning point came in 2006 with the enactment of Securities Act, which for the first time established a clear legal and regulatory framework for the market and created Capital Market Development Authority since then. Since the CMDA has played a central role in investor protection, oversight, and regulatory enforcement. The launch of the Maldives Stock Exchange in 2008 gave the market its dedicated platform for listing and trading. For those early steps, the market has grown steadily, with the capitalization now exceeding MBR 34 billion. Each reform and milestones, whether in infrastructure, regulation, or participation, has expanded both the credibility and inclusiveness of the market. Ladies and gentlemen, yet challenges remain. Markets still account for about 32% of the GDP. Banking lending continues to dominate the financing. Liquidity is limited, participation is narrow, regulatory gaps across the sector have constrained growth. This is why resilience and inclusiveness must guide our next chapter, which we are about to begin. Resilience so the market can absorb the shocks, safeguard long-term investments. Inclusiveness so that the businesses of all size, especially women-led enterprise and ordinary savers, can participate and benefit from the system. For the Maldives Retirement Pension Scheme, a deeper and more efficient market is essential to prudently manage long-term investment strategies, preserving the member savings and deliver adequate retirement outcomes. Today, the forum will explore how to unlock access to finance for businesses, embed stronger governance and safeguards, and position institutional investors like Pension Office as a catalyst for sustainable growth. I would also like to highlight that the whole financial system work together as a system, and it is important that we, as we deliberate today, we keep that in mind, that it is not just simply the capital market that operates on its own, but there is a whole ecosystem at work, and how the interconnections and the feedback loops all really matters. Globally, we see how diversified instruments, digital platforms, and robust governance framework build confidence and resilience in capital market. For us, the challenge is not to replicate these models, but to adapt to lessons and ensure that our market grows with transparency, inclusiveness, and strong investor protection at its core. International Financial Corporation's recent research showed that in low and middle income countries, expanding capital market financing is closely tied to economic growth. Yes, we are experiencing economic growth due to the tourism boom or tourism growth. But I think it's a good time for us to reflect back, especially today, if we could reflect back and see how far or what type of growth would we like to have. Growth increases household savings and creates more business opportunities, as we all know, which in turn strengthens both demand and supply in the market. I would also like to urge, it's a difficult discussion to have here, especially among the most Maldivians. Demand and supply, the market forces would prevail. It will ultimately find its course, unless rightly guided. So let me not go further, because I'm humbled by today with Henrik Cruz, who is an international expert on pension investments with over 30 years of experience, will share his global perspectives to frame and guide our discussions. We value his consultancy over these years in assisting the Pension Office in developing investment and risk framework in line with ISA guidelines. Henrik, we are truly honored to have you here to share your insights. As we look ahead, the journey will not be without challenges, but it is full of opportunity. This forum will provide a space to exchange perspective, deliberate on differences. Let me repeat again, deliberate on differences. We should deliberate, spark new ideas, and shape the next chapter of our market growth together. I extend my gratitude to all the panelists and speakers, especially those who came here despite the busy schedule. And more importantly, I'm very grateful to the dedicated and wonderful Pension Office team led by our CEO, Sujata, for making today's event possible. May our discussion today serve as a catalyst for collaboration, innovation, and practical steps towards a capital market that truly supports sustainable and inclusive development. Thank you, and I wish you all a productive and insightful forum. Thank you.
Thank you, Dr. Inaz, for setting the stage with your enlightening remarks. Next on the agenda is a presentation on supporting business growth by Mr. Shuhad Ibrahim, Trade and Investment Consultant at the Ministry of Economic Development and Trade. Mr. Shuhad has served as chairperson of the SME Development Finance Corporation and as a board member of the Maldives Monetary Authority, and has overseen programs supported by the World Bank and the United Nations to advance private sector growth and economic resilience. Please welcome Mr. Shuhad Ibrahim.
Thank you. I'm Shuhad. Bear with me. I have a bit of a cold running for a few days. As mentioned, I'm a consultant at the ministry. Very happy to be here. I hope to be here the next year as well because AI, according to an AI study, us consultants are the first one on the chopping block. So let's start. So if you look at MED, we have something close to around 7,000 annual registrations of businesses. Most of them are micro, small, and medium enterprises, mostly micro and small. And out of this, we see only a small portion go into high value or high growth firms. But every day and every time as a policy professional, when I meet them, I think the question that we have with them is the same. What is your number one hindrance to growth? And the first question always is finance, finance, finance. And this has been the case when I was just as a development professional 10 years back as well, when I started this survey at the central bank, and right now as well, it's the same thing. When it comes down to ranking, it's always finance. But when you look at private sector demand, year on year, I mean, there's quite a robust growth, like 7% growth last year itself as well. But, I mean, what we get is that there is enough demand, but we're still unable to cater to that demand. I mean, there are a lot of reasons to that and how we address it through the ministry as well. I mean, banks do take up the bulk of the responsibility. And I mean, due to the structural limitations within the economy, I mean, we have very, higher interest rates compared to other OECD countries. But if you look at other similar countries such as Seychelles, you see that the growth, the loan rates are almost the same as well. We have fiscal pressure as well, which sort of crowds out private sector liquidity as well. And then similarly, how SMEs face quite significant challenges such as collateral requirements and other limitations when they go for the financing. As a government, I mean, lots of solutions have been rolled out over the last few years. Concessional loans, grants, specialist SME financial institutions, credit guarantee schemes. We worked on ecosystem building, trying to get technical assistance to businesses so that they are more efficient in their resource allocation. We've tuned our for FDI policies so that we can create a corridor for more investment from abroad as well. But at the end of the day, I think we still have the same prevailing, conclusion as well. Some of this is not enough, barely enough. And some might argue that it's not the most efficient allocation as well, and hence there's the need to have more diversified financing for businesses. So when you look at first thing, when you look at some studies as well, in a country with diversified funding, we see that crisis management is easy as well. Banks lend more. And even economies are able to hold on to employment more in a more robust manner. Right now, I mentioned that we have a very high cost of lending, but with diversified funding, we can go for lower and cheaper funding mechanisms as well. In addition, this also creates an avenue for investors to actually sort of channel their savings, whether it is corporate customers or just even retail investors like me as well, for example, to actually get a better return from what we normally have right now, that is through the banking system. When you look at the banking liquidity, we have some 8 billion lying around, not lying around, I would say. We have some 8 billion. I mean, and that sort of is reflective of the need for alternate investment channels. If you look at what we have right now in the market, a term deposit is normally somewhere around 4 to 5% for 2 to 3 years, and then in the securities market recently with the new entrants, we have somewhere around 7% investment opportunities around. So we still an investor would like to look for more higher returns as well. So with this much money, I think there's still with this much liquidity in the banking system, which is sort of frozen and it doesn't move around into productive cases. There is a very huge demand, need for alternate investment opportunities. I mean, last year the hottest investment opportunity was GEMQ, but we don't talk about it here. But we need some proper. I mean, we need to have better sources where we can actually channel our funding. And we are happy to see that the private sector is still leading the way on this in the securities market as well, especially by the capital market. In the last 2 years, almost $500 million was securities issued in the market. We can say it's still not enough, but then I think it's a very positive statement from the private sector as well to showcase raising finance for a lot of companies for different things. I mean, some of them for infrastructure-related projects, other for cash flow-related projects, which I think can grow and also saturate down to even smaller scale businesses, such as medium scale businesses as well. Say they want to build a guest house, like a 30 bed guest house, or they want to have a fleet of, say, supply dhonis, or just to be in a practical manner. And I think this is a very, very positive sign. In terms of policy, where we are now and what we do, I think investor protection is quite key to go ahead and to achieve our vision, actually. Acceleration and incubation services for businesses is key as well. What we see is that we have quite a few micro, small enterprises, a bit of in the middle that do not sort of want to move forward. We've been working with the World Bank as well on creating a program where we are able to take a group of high potential, high export, high growth potential firms and trying to accelerate and build their businesses such that they move into the next category as well. We need development professionals and those with experience as well. We did a bit of work with CA Maldives one or 2 years back as well, trying to supplement professional trainings. But I think this is something that we can still further scale to have more professionals within the economy as well. And lastly, the supplementary ecosystem, including legislations. We recently had the revised Companies Act. In addition, we reviewed and relaunched the Foreign Direct Investment Act after 40 years. And then I think this is where our dialogue now also needs to have a better focus on us. When we plan out the 20-year National Development Plan, I think how the capital market, how the entire financial market, as Chairperson has mentioned, the whole ecosystem needs a very clear vision in the 20-year National Development Plan. I can say with utmost guarantee that finance is only understood by a very small group of people. And in my years, around 10 years in public policy, there needs to be more dialogue on this as well. So I think when we plan out the 20-year National Development Plan, which has been envisioned by HEP as well, this is a very, very important step forward to actually reroute our direction in moving forward. So that's about it from me. Thank you.
Thank you, Mr. Shuhat, for sharing your valuable insights with us. We will now take a short break. Tea will be served outside the hall, and we will resume at 10:10 a.m. We kindly request that all speakers, panelists, the CEO of CMDA, the CEO of Pension Office, as well as board members and the executive team of the Pension Office remain in the hall for a group photo session. For the first photo, I would like to invite Mr. Henry Cruz, Mr. Muhammad Hussain Manik, CEO of CMDA, Dr. Ahmad Inas, Chairperson of the Pension Office, and Ms. Sujata Halim, CEO of the Pension Office, to join us on stage. Please wait. Next, I would like to request the panelists, speakers, and board members of the Pension Office to kindly join us on stage for the next photo. Please remain on stage. Now I'd like to request the executive management of the pension office to join us. Executive. Yeah. It's okay. Welcome back, everyone. We now proceed to the first panel discussion of the day on unlocking business growth and accessing finance. The panelists contributing to this discussion are Mr. Rifat Jalil, Chairperson, First National Finance Corporation, Mr. Abdul Wahid Taufik, Chairman, Divahi Investment Partners, Mr. Robin Wall, Chief Financial Officer, Diragu, Dr. Ahmad Inaz, Board Chairperson, Pension Office. The discussion will be moderated by Ms. Haifa Ahmed, Head of Investment and Advisory Services, Pension Office. I kindly request the distinguished panelists to take their seats on the stage.
Good morning, everyone. Good morning, everyone, and welcome to today's first panel discussion. We're honored to have you here as we continue our exploration of this year's theme, Building a Resilient and Inclusive Capital Market. My name is Haifa Ahmed, and it's my pleasure to moderate this panel. As we begin this discussion, it's important to reflect on the backdrop against which this discussion will take place. In many small and medium-income economies, underdeveloped capital markets limit liquidity, price discovery, and risk diversification. The Maldives is no exception. Bank lending remains the main source of business financing, with private sector credit reaching nearly 37 billion rupiah in 2024, compared to just 86 million rupiah raised through the capital market last year. This contrast highlights the significant untapped potential for capital markets to complement bank lending and provide businesses with stable long-term financing. Today, we will explore how businesses in the Maldives can leverage capital markets to broaden access to finance, unlock growth, and contribute to a more resilient and inclusive financial ecosystem. To guide us in this important conversations, we are privileged to have with us distinguished panelists of experts who will share their insights. Please allow me to briefly introduce our panelists. To my right, Mr. Abdul Wahid Taufik, a chartered insurer by profession. Mr. Wahid has 30 years of experience in the insurance industry. He is the chairperson of Divahi Investment Partners, co-founder and the chairperson of Divahi Insurance, which has grown to become one of the leading insurance companies in the Maldives. He has extensive experience managing market lending companies, leading teams in strategic planning, finance, and management. Mr. Wahid is an associate of the Chartered Insurance Institute, UK. Our second panelist, Mr. Rifat Jalil. He is the chairperson of First National Finance Corporation and the managing partner of MHPA, with over 30 years' experience of expertise in assurance and advisory services. He holds a professional membership with CPA Australia and is also a chartered valuer with the Royal Institute of Chartered Surveyors, UK. Mr. Rifat provides strategic advisory services to leading private sector organizations, state-owned enterprises, banks, and multilateral corporations with extensive expertise in cross-border transactions. Our third panelist, Mr. Robin Wall. Mr. Robin Wall is the Chief Financial Officer at Dirag. He previously served as a financial control for Monaco and Islands region at Cable and Wireless Communications. He's a fellow member of CIMA and holds a BSc in Management Studies. He brings a wealth of financial and operational expertise, and his leadership continues to drive strategic growth and transformation at Dirag. And finally, Dr. Ahmad Inaz. Dr. Inaz has served as the chairperson of the Board of Pension Office since June 2022. He's a former finance minister and is currently an assistant professor at Maldives National Business School. Dr. Inaz's notable achievements include spearheading crucial financial reforms in the country, such as introducing the country's first tax system, implementing the National Health Insurance Scheme Asando, proposing the first SME Act, and advocating for fiscal decentralization and greater government transparency. Dr. Inaz holds a doctorate from the University of Auckland. A warm welcome to all our panelists. Before we begin the curated segment of the panel, I would like to note that questions can be submitted throughout the discussion using the QR code displayed on the screen. Please note that the questions submitted the QR code will be curated before being displayed on the screen. Let's begin. My first question is to Mr. Wahid. As highlighted in the morning's presentation as well, while bank financing has grown rapidly, market-based financing remains very limited in the Maldives. From your perspective, what explains this gap? What steps could make market financing a more attractive option for Maldivian businesses?
Thank you. First of all, I would like to thank Chairman Inaz and CEO Sujata for organizing this forum, which has been running for many years successfully. So it's a very commendable effort, so I would like to thank. And also thank you for inviting me on this panel. So just to highlight on what you have just briefed. So I would say that we have been in a very traditional market environment as far as finance is concerned. I would say it's a static environment. In my many years' experience in business as an entrepreneur as well, even though the banks are very much supporting the businesses, I would say the banking product is very limited because it has its certain peculiarities where it is asset-based lending, and it is not very flexible to some of the changing requirements of a business as it grows. So I would say that for companies which are very established, banking finance is quite easy or accessible, but for companies who are growing, who have the needs to grow, I think capital market is a very good option. Of course, I would like to thank the banking sector for their participation in the economic growth of the country. But I would think the future is the capital market as far as the growing role of the additional growth in the business sector. And I think that the lack of capital market growth is not because people don't prefer it, but because it is relatively very, very new in the market. And we are very keen to support the capital market growth. The investment partners, together with other firms, we are raising capital, in the process of raising capital for others, and also through investment, establishing investment funds, also investing in other companies, and also inviting others on board to invest in very good companies as well. I think when the good products are in the market, the take-up rate is very, very high. I would cite an example from the insurance industry, if I may, because traditionally the financial guarantee market has been predominantly done by the banks. But over the past 7 years, when the insurance companies started to provide financial guarantees to the customers, I would say now almost 90% of the market is done by the insurance companies. It is because the traditional banking model is based on the cash collateral, and there's more flexible terms done by the insurance companies, especially for the SMEs. So I think the capital market will also follow a similar trend when advisory companies are more focused on the needs of the clients and tailor solutions for those needs. Especially in the market of Maldives, we see a great requirement for capital market involvement for the companies because of how companies are growing for the SME market. Also, in other aspects such as wealth management for the individuals, especially the high net worth individuals, and also for the asset management and also as many companies are family-owned companies. When the owners want to retire, they want to divest their shares or corporatize the business. I think capital market companies can have a very great role in that. So I see a very good future for the capital market, even though we are in the initial stage. I'm very hopeful about that. Thank you.
Thank you, Mr. Wahid. Let's now look at the process companies go through when seeking capital financing. My question to Mr. Rifat is, Chairperson of First National Corporation, you worked with companies seeking finance. Could you walk us through the key steps, requirements, and disclosure obligations in the listing process, and where businesses typically face challenges?
Hello. Assalamu alaikum. Yeah. Thanks. Thank you for inviting us to this forum. Once again, we would like to thank Sujata for this well-organized event, and the team at the Pension Office for inviting us to this forum. With regard to your question on the listings, I will not go into the detail of the procedures that they have to follow, but basically because the details are there in the regulations for everyone to see, the MSC regulations and the CMDA regulations and the Act, the Securities Act. So basically, it's the main challenge is, I would say, a psychological challenge. You know, people don't want to open up. A listing requires your company to be prepared for outside investors, whether it's an IPO or a debt issuance. So it's a mental barrier, I would say. In the Maldives, we have been very used to keeping our books private, but with tax kicking in 2011, 12, so people have started to be more used to opening up their books to the authorities. And with that, you know, now we are experiencing people listing securities privately through the Vienna platform, which have actually accelerated the growth of the capital market. As I've said, you know, there are two ways of listing. It is the going through an IPO process or going through a debt listing process. We've recently experienced a growth in appetite for listing in the debt securities, and the appetite is very clear. We've raised through First National alone, we've raised over close to 300 million over the last few years. This is something new to the Maldives capital market, and it's so successful. The appetite is so good. We've raised, you know, we've made some bonds successful within a period of 7 to 10 days, basically. You know, the appetite is there. We just need good companies to come to the market, incentivize them to come to the market. The listing process is very similar. I mean, when you're trying to attract funds from the market, you have to be transparent. You have to get used to the idea that transparency is key. Market confidence is key. We have to bring to them, as investment bankers, First National makes sure that, tries to make sure that the products that we bring to the market are good quality products that are, you know, that investors will find them attractive compared to other options that are available in the market. So listing procedures, you know, you don't have to be worried about it. We will take you through the entire procedures. We will work with you with the Maldives Stock Exchange, the CMDA. These are not very scary processes. It's tested now. We are familiar with it. We'll make life very easy for you. So listings through through an IPO process or on the Vienna platform is a tested very. You don't have to be worried about it. So we would encourage a lot of good quality companies that are operating in the Maldives to get in touch with us. You know, I would like to actually, in relation to this topic, I would like to appreciate the work being done by CMDA and the Maldives Stock Exchange, particularly the CMDA team, to try to facilitate the growth of this market. They're working very hard. We are also working with them to make sure that the products we bring to the market are good. We are trying to make things easier for interested investors to list on the market.
Thank you, Mr. Rifat. So you mentioned the challenges and the setbacks for businesses. So let's hear a perspective of DIRAG, which has been a listed company. So Mr. Robin Wall, from your perspective, what has been the key benefits and challenges for DIRAG, and what has influenced corporate governance practices, disclosure standards, and investor relations? And how has long-term capital compared to being private company? And what do you think are the lessons that could be taken away for a company considering an IPO?
Hello, everyone. Thank you. Quite a few questions, I think, wrapped up in one. I may have to come back to you on that. Yeah. I just wanted to say thank you first to the Pension Office and Sujata especially for organizing this. I think it's a very important discussion for the nation and giving me the opportunity to come and speak on this panel with other distinguished participants as well. I think from Diragu's perspective, we listed about 14 years ago, and I would say in general it's been a very positive step. I know at the moment there are only 9 listed companies. I think it has grown since we listed, but maybe not at a rapid pace, and I think there is definitely more opportunity out there. I note also what Rifat said regarding the debt issuances as well. So that's a positive step without going to full listed companies, let's say. I think from Diragu's perspective, if I look at this in terms of the way it can benefit, there's increased transparency. I guess we can look at this in different ways, but I think it's a good thing to have increased transparency. I think everybody builds confidence when we have transparency. We have to be prepared for that. Governance improves. I think, to be honest, just listing itself focuses the mind in terms of the governance. So ensuring that the robust procedures are there. Let's say even if we look at the board governance, the structures, the management structures, the policies and the procedures. And investors demand this, so I think it really focuses us to improve. And I think we've done that gradually over the years since we've listed. And of course, access to capital. And I would say this probably in a direct sense as well as maybe in an indirect sense, not necessarily just from the capital markets, but I think for, let's say, existing shareholders to potentially monetize existing value, bringing in new shareholders. I think it also potentially creates a market in case of further issuances, whether that's additional share capital or debt. But I think even for conventional financing, I know we're talking a lot here about we still have this tendency to go to conventional bank financing, but whether that's banks in the Maldives or other lenders outside, I believe it potentially opens up opportunities to have a more diverse range of financing options. So definitely there's more access. I think it can be more competitive so that listed companies can assess various options there. So they have a greater, I believe in our view, we have taken financing from local banks. We've also secured financing from international lenders. And I think it's also the amount you can access, what it's for, terms. We're talking, I think my good friend Wahid over here mentioned about some of the challenges for growth. If we talk about existing businesses who are more mature, who can provide security, then it's an option to take conventional bank financing. But for, let's say, less mature businesses, and I think now, there's a lot of startups in the Maldives. There's a quite big entrepreneurial community, I would say, and a lot of opportunity to grow this. But I think it was mentioned before about the number one hindrance being access to finance, access to capital. So if banks are taking a very secure approach and wanting this, many of these ideas will never take off because people don't have that. So, I think the expansion of the market and more products can encourage these things from small to large as well. In terms of challenges for us, I would say challenges in the sense they're not things I would say should put you off, but obviously transparency can mean that you've got to be very open about everything, okay? You know, sometimes we have a tendency to not want to disclose certain things, but obviously if you're going to transparency, you have to be prepared to be very open. So it's not necessarily a concern or a challenge, but it's, I guess, ensuring that you have the relevant procedures and you're prepared for that. So it's you know, I think a good thing overall, but you have to be prepared for that. Your let's say, reporting level of disclosures, it's not an easy thing. If you're a private company, maybe you don't have to do the level of reporting. I know in the last probably 10 to 15 years, with audit requirements, reporting requirements, tax and so on, it's improved, and I think it's strengthened the foundations to support, you know, other companies listing. But when you become listed, some people may see it as a burden. I mean, for example, our annual report is about 170 pages. We have to report, do a quarterly report. We have to disclose certain important events. Some people may see that as something that's cumbersome, but I think if you're set up well, if you embrace this, if you put the right governance structures in place, if you've got good people on your board, in your management, and you respect these things and look at it from a positive perspective, then, you know, these are not necessarily challenges or obstacles. It's just something that you have to do for the greater good. So, you know, I think from that perspective, overall, being listed in our experience has been good. The positives far outweigh the, if I say the negatives or the challenges, and these are just things that, you know, are part and parcel of doing that. But it's taking that step, and I think sometimes it's a mental thing where we think, for so many years, we haven't been like this, you know, we're happy the way things are, we don't want to go through that. We have to change the mentality and realize it's a good thing. And I think for every company and, let's say, organization that participates in this, not only does it strengthen that organization, it strengthens the whole market, it strengthens the other companies that participate. It creates an opportunity. I think it encourages other companies who are maybe not yet listed. And the overall strength of the economy, I think, is improved by a stronger capital market. I think we'll probably have more discussions around what kind of companies could be there, because I think many of us have an idea of easy pickings maybe in terms of certain types of things, whether SOEs or other large private enterprises. But for me, the investors, the shareholders in these companies maybe should think about not only themselves, but also the knock-on effect. I think there'll be a catalyzing effect across the whole market, and I think also from the government perspective, because these things are not possible without the government and, you know, strong regulations. I think it will actually be, you know, a positive development. The whole ecosystem will improve, and everybody benefits from that. I can't recall the.
No, I think you've covered it all.
Have I covered everything?
Yes.
Yeah. Okay.
Yeah. Thank you. So you mentioned the governance standards and how it raises governance standards at a company level. Let's now turn to how governance matters from an investor's perspective. Dr. Inas, from the perspective of pension offices, the country's largest institutional investor, how central are governance and disclosure standards to its investment decisions, and how can institutional investors encourage more companies to embrace listing as a pathway to higher governance?
Thank you. I think a lot has been covered by our other panelists, but I would start from where Mr. Wali has left off. I think it is important, while the market is developing, to have an open mind, to be open to the changes that is required. That is, I think, perhaps the starting point. Having said that, but it is important that to understand from the pension office perspective that pension office has a fiduciary duty to invest in MRPS funds in the best interest of its members. I think this is a bit of a difficulty to put that shoe while you're working on a lot of changes, dynamism in the market. So I think it is a place where we need to pause and think about putting that into perspective, being the largest fund, it actually puts a lot of pressure on. And so I really want to emphasize on that, which means that we need to also think about the long-term objectives and prudent risk management in that. Thus, we need to think about effective investment decision that requires careful risk assessment to balance returns and also capital preservation. I mean, we like the market, how it has changed, how dynamic and how it is evolving. But while it is happening, we need to keep this from the pensions member perspective need to be kept in, so that we will then be able to make a positive stride or positive change. It is also, I think, as three panelists have also mentioned, the transparency that builds the confidence, and also enabling institutional investors to implement a long-term and disciplined approach in investing. I know that we are, as a market, we are transiting and we are trying to learn to become more and more disciplined with regulations. But I really don't believe more and more regulation doesn't mean necessarily that it will discipline. Sometimes it can be restrictive to innovation. So while keeping that in mind, we still think that building on transparency is the critical factor. Finally, I think on the first question that you asked, is the standard disclosures is very, very important, and that will ensure proper due diligence in the absence of information. Risk from our pension side, we cannot fully assess it, and which I hope the market players would understand that and this is where I want to say it slowly, that a market that cannot be modeled is by definition a market that investors cannot trust. So which is, I think, important for long-term sustainability of the market itself. Now, having said that, I think the second question that was asked for me by Haifa was, how can the institutional investors encourage more companies to embrace listing as a pathway for higher governance? I think institutional investors such as the pension office or any other play a very important role encouraging companies to list by signaling to the market through the investment choices that we make. In the past, the board might have made some decisions that probably can imply that we made some signals that we really want more information, we want more disclosure for us to make certain decisions. By prioritizing our investment to companies that demonstrate stronger governance and transparency, we also make it clear to others who are going to come to follow suit. And beyond the investment, we also like to see that we can engage with regulatory bodies even more. I'm not saying that currently the engagement is not happening, but I think we need to engage more frequently so that the market innovations that has to come to or changes that needs to come to the market can be more swift. Issuers to strengthen the disclosure standards or highlighting the benefits of listing, including enhancing credibility or access to long-term capital or lower finance costs. Governance, I think we need to keep in mind, and I would like to end this part, is that governance is not a burden, but a pathway to growth and resilience. We need to, when we make regulations or when we are moving forward with the market, we need to keep in mind that we don't make the regulations that would stifle or create barriers for innovativeness in the market. But at the same time, like our panelists have said, we need to embrace the governance, the changes that are coming. Thank you.
Thank you, Dr. Naz. So while governance is key, but for a truly inclusive market, we do need active participation from retail investors and minority individuals as well. So Mr. Wahid, my second question to you is, what mechanisms should we place to strengthen the confidence so individuals and retail investors come to the market, and how can we make a safe and attractive option for all players in the market?
Thank you again. I think right now we should be thinking about putting more items in the menu, basically. So we should try to bring more listings, more products to the market. I think the advisory companies, together with the capital market regulators, we are all working in that direction. I think for the investors to participate, there should be more options that they can really invest, especially for the individual investors. Right now, there are some issues in the some listings in the market, but it's very few. So we need to have a more diversified investment instruments to come to the market, so that the investors can match with their investment their risk appetite. That is one aspect of it. I think that can be done together with the regulators to the stock exchange and capital markets to have a better, still even a better framework where there's more, where the investors and the participants, they can come together. We now have the Vienna portal, and there are investors on board. But I think we should also have still a more active engagement between the investors and the issuing and the advisory companies, where we can present the investments to the investors. It can be that kind of platform where we can reach many investors at once will be good. I think Stock Exchange is doing a good job having it on their online platform, but I think we still have to enhance that mechanism to have more access to the investors as well, so that we can really give the information to the investors. I think information is very key. We are starting out new in the market. Still, people are not thinking about what investment. They are thinking about what is capital market. So we are at that stage. So I think it is very important. Another point is that, especially for the retail investors, when they want to invest, there should be products that suit their investment horizon. If they want to exit the investment, there's an easy way that they can exit as well. So that point is also very important. And also, as far as protection is concerned, we should make them understand about the mechanisms that we have where we can provide the investor protection. Currently, in the issues, there are committees where the advisory firms represent the investors as well to track how the funds are being utilized by the companies. I think this is also very good feature. So, as I said, these kind of mechanisms enable a more active type of investment portfolio in the market, and where the investors can really participate. And so in the capital market, different companies, they have the different needs. So when they come to the market for the different financing options, or the investment funds are investing on behalf of the investors, there should be different levels of mechanisms where different type of investors can invest. Now, in the capital market, in the stock exchange, there are certain listing rules. So I think these listing rules can be applied also for the medium-sized companies. But I think there should be also another level where the very small companies, they can come. So we need to put more items on the menu so that all kind of investors, retail investors or small companies, even people have got some money in their bank account, high net worth individuals, or even somebody have some family investments which they can part with, so they can engage. So when we have those kind of diversified investments that they can put the money and the advisory companies, we are advising the investors. I think it also helps them to gain the confidence that the capital market is really a mechanism where they can invest, because traditionally they have been putting the money in the banks or some, otherwise they don't know how to invest their money as well. So I think these mechanisms will really help them with investment decisions, to make informed investment decisions where they can really actively engage. And another aspect, I feel that in the capital market, the growth will come through the competition of where when companies, they can secure the funding through the capital market, other companies will really follow. So this is also one thing where we, our investors, even pension office or other institutional investors, we should think to really actively participate at this stage so that we build the confidence in the market, so that the market as a whole will be more accessible, and it will create an additional avenue that is a mainstream avenue for the investors to invest. That is very important. Thank you.
Thank you, Mr. Wahid. You've highlighted how we can bring in more instruments into the market. So as more companies list and investors come in, the functioning of a secondary market becomes crucial. Liquidity still remains a challenge in Maldives. Mr. Rifat, how does increased listing contribute to liquidity? And what measures could stimulate more secondary market listings once instruments are listed?
Yeah, thank you. The short answer to your question is to increase liquidity, we need to increase the number of investors, we need to increase the number of listings, we need to increase the number of buyers, sellers. We need also to increase the number of products in the market. So how do we do this? We need to, I think what is missing here is still, although a lot of good work is being done by all the, stakeholders in the industry market, we still need to put a lot more concerted effort into developing the market. Once we develop the market, liquidity will improve. Improving liquidity is not a simple thing. We cannot do it overnight. It has to be a concerted effort, a planned effort. All the institutional investors, the regulators, the stock exchange, the private sector players like us, Wahid's company, we all need to work together. It's not what the work we are currently doing is definitely not enough to get the machine going. We have so much more potential. Maldives market is relatively small, even compared to our closest neighbors. Sri Lanka is like, their population is in their 20 plus million, I think. Ours is still in 500,000, and then in the markets, obviously we're just comparing our neighbor, which is not world standards. They are not big, but we have so much potential. We have products that other people envy of. Look at the tourism industry. We need to open up the tourism industry, incentivize them. Foreign investors will not invest in the Maldives market unless they are foreign currency denominated, unless we issue foreign currency denominated products. How can they repatriate their capital? A lot of companies that have invested in the Maldives, their profits are stuck here because of foreign exchange issues. My friend Robin would be able to tell you more about it. So this is a major issue. We really need to put a concerted, we need to focus on this and incentivize the tourism industry or the fisheries industry, which generate foreign currency. Unless we do that, the new segment will not open up. We cannot rely on the domestic market alone. We need to open up. We need to incentivize people, the businesses operating in the tourism industry to come to the market. The returns are good, ranging from 15 to 20% in the tourism industry. The good ones, I mean, not everyone is doing that well, but I mean, on average, based on the work we do, we notice that the returns are between 15% and 20% per annum, which is good at any level, if you compare other world-class, investment products. And it is relatively safe. Our tourism industry has been always good, inshallah, it will remain good, and the statistics show that it's still improving everywhere. We're expecting 2.4 million arrivals this year. So why not we focus on this and do something together? The government's plans, planning apparatus, and everybody in the market, we should all work together. And to improve the liquidity, we need to open up. We need to find creative ways to bring people to the market. So I think, in short, that will increase the number of investors. The market products, the products available in the market will be more diversified. People will take more interest. We need to bring more. There's a lot of idle, by the way, there's a lot of idle capital in the country. We noticed, obviously we cannot mention names of these entities, but even government entities and other similar entities have lots, hundreds of thousands of rupiah, millions actually, idle funds, not invested anywhere. We need to get this, mop up these funds, get it into more productive use. There's so much opportunity, but what I feel as from the First National point of view, I think we need a more concerted effort. We need to collaborate more. Communication is definitely lacking. If we can do a bit more, the liquidity will improve significantly. There's a lot we can do.
Thank you, Mr. Rifat. You mentioned how we can bring in foreign investors as well. So, Mr. Robin, my question to you is, looking ahead, what changes, innovations would best unlock business growth through market-based financing and make access to finance more inclusive and build investor confidence, both locally and also foreign investors?
Well, thank you. Very good question, Haifa. I think Wahid and Rifat have covered quite a lot of things which are very important to this question as well, and I would say I completely agree with them. I think in terms of, let's say, providing opportunities to invest in, obviously we need to, if I say create the market, I mean really grow the market. I mean, the market's there, but we need to create a more kind of prosperous market, and I think that can only happen by having more opportunities. So whether that's more companies coming in and being prepared to list, issuing debt securities, etc. I think if we touch on the foreign investment bit as well, I think that will open up opportunities, but we shouldn't just look at the excess capital here, but I think creating opportunities for people to come in and invest here, we need to embrace foreign investors as well. There are certain challenges, Rifat mentioned one of them, so we need to embrace them. We shouldn't be put off by challenges. Challenges are a part of our lives, it's something that we've overcome many challenges throughout our history, fiscal or otherwise, so we shouldn't see any challenges insurmountable, but I think we have to look at that, because I think one thing is there's definitely untapped opportunity here. There's excess liquidity, But I think encouraging foreign investors, we need to make it easy for foreign investors to come in here. We should give them confidence, but make the procedures very easy as well. And I would also say the other way around. You know, we're talking about the market here and looking at how we can create a more inclusive, wider participated market with more companies here participating. But I think also from an investor community, to have more people participating and giving them access to things, why should we limit ourselves to looking only here? You know, we can give people access to other markets. I mean, people can do these things themselves if they have the means. There are plenty of opportunities and platforms to do that, but I think we can encourage that. I think there needs to be some focused, concerted effort, because then people can also have diversification. You know, there's a lot more opportunities there. I think, you know, obviously then, so looking at the market of things to invest in and then looking at the investor base, if we just look here, I think there's different levels of investors. I mean, you know, whether we look at, let's say, institutional investors, there's very few. The pension office is one, and I think they're doing a very good job. They have challenges because they have to diversify their portfolio, and they have very limited opportunities. The gentlemen to my left and their organizations are creating opportunities too, which is great. I think we need to encourage more. You know, we shouldn't necessarily just see this as competition, but I think it helps us to grow and create opportunities there. I personally feel if we want to look at, let's say, encouraging more investment, I think there's different reasons, whether it's people on an individual basis thinking about the long term, investing for the future, investing for retirement, investing for growth, whatever it is. We need to give people opportunities. I think there's got to be funds oriented. Maybe I think what I had suggested a little bit in terms of looking at the market needs and, you know, creating different ranges of things, but, you know, whether it's large things for institutional investors, whether it's smaller opportunities to encourage more people to, if I say put a foot on the ladder, you know, once you're there, then you'll probably start actively participating. And I think also, especially, we've got a young tech-savvy community as well. Most people are probably not thinking at that stage about investing, but we could create products for, you know, oriented for different people, young people, so that they can, it doesn't have to be the biggest thing, but at least they can, as I said, get their foot on the ladder, you know, so that they can participate. And I believe once you start participating in something, you're going to be more engaged and then you're going to grow. So it may not be about making so much money on this right now, but I think you get them there and then eventually they'll have more interest and they will actively you know, be involved in that and help to grow the capital market. I think then in terms of technology as well, I mean, that's obviously, we need to make it easier. I mean, we can talk about two things, probably technology and regulation, and I would agree with Dr. Inaz as well about, I'd say regulation maybe is perceived as a burden by some, but I think it's an enabler and it shouldn't be seen, I mean, obviously we need to get the right balance and things move and evolve, you know, we have to move with the times, but it should be something to build confidence, you know, because investors need confidence. If investors have confidence, it builds a stronger capital market. And regulations should enable things to happen. It shouldn't hinder, but, you know, it should be easy to do things, but give confidence to people that there are mechanisms and robust measures, as well as, obviously, consequences for negative actions if they do happen. But it should be easy to participate. It should be easy to comply. It should be easy to do things. It shouldn't be a hindrance. And I also like the suggestion, I think, in terms of, let's say, different levels, you know, in maybe, I know we only have 9 listed companies again, but, you know, if one thing is somebody who's smaller has an interest to do something, but they see that they have to be subject to the same level of scrutiny as BML or Durago or Ooredoo or whoever it is, that may put them off. So maybe we could look at different things there as well to, again, you know, just introduce this, and maybe eventually that smaller organization will become bigger because they've got access to the capital market. So I think we can look at different things there. On the technology side, I mean, some of you are probably already using apps, whether it's something here, I think there are very limited opportunities, but, you know, abroad there will be investment apps. So you can go in there, you can invest in anything, whether it's conventional securities, Bitcoin, what have you. So we need to embrace technology. We need to make it easy. People do not want to go and do things in a very bureaucratic manner, which is going to take ages to do, having to visit some place, have to fill out paper forms and everything. So we need to have, I would say, a digital app-based ecosystem, whether we can do that or we can work with others to bring these kind of things there, so that there are things which people can easily register for, do the KYCs, whatever we need to, but then they can buy, trade, do those other things very easy on a wider basis. So those are just some of the thoughts I have anyway. Thank you.
Thank you. So we talked about the businesses and how we can unlock business growth. Dr. Inas, you mentioned in your opening remarks how capital market cannot be one player. It's a part of the whole ecosystem. So research shows that in the low and middle income countries, expanding capital market is financing closely linked to domestic economic growth. That is, that growth increases household savings and creates more business opportunities, which in turn strengthens the demand and supply in the market. In the Maldives, how do you see this interplay between economic growth, household savings, and capital market development? And what role can institutional investors play in supporting this cycle?
Thank you. That's a really important, timely question that I think the purpose of all of us interacting with each other in this forum during the tea or the lunch, I really want all of you to go forward thinking on this. And I've been trying to promote this at different forums, is the, if you may think about the example that I'm about to say. When we are building harbors in an island, and we block the natural system of the waves and the water, what happens is, I'm not an engineer, and by the way, there might be people who are sitting here much more expert in that, but what happens is that we will see, without thinking of the whole system, if we build the harbor, we will see that the water will turn into green because the ecosystem, the players change, the dynamics change, and so forth. So even in a financial system, I believe that we need to think about from a system thinking perspective, where the capital market is quite a complex adaptive process. It is very dynamic, very adaptive. For a small country like ours, it's even more, sometimes it is more dynamic under the surface, sometimes under the coral, as I said before, the dynamics happening there is much more, the interactions happening is much more dynamic. So we need to think about the moves that beyond the linear cause and effect that normally we get trapped in our everyday. I'm sorry I'm taking a bit long here in my explanation here in this one, but we need to focus on the feedback loops and the interactions, the emergent behaviors and the purpose. And I think that goes back to the question that you have asked. How does that lead to economic growth? In going so forward, a capital market has to efficiently, the features are, it has to efficiently allocate capital, one. Two, it has to facilitate risk management, where the innovation and the regulations has to keep that, pulling those levers and ensure that the risk, I'm really going a bit too far with Henrik here talking about it. But the third element, I think, is the feature would be to enable price discovery for the financial assets. The fourth being providing liquidity. And finally, coming back to the Haifa, your question, supporting economic growth and innovation. So answering to your question particularly, I think the link between the Maldives growth and saving and capital market is really fragile. It is fragile, but our our main industry is tourism, household. We see that household income increases, creates a potential for saving. But in practice, much of these savings usually stays in the bank deposits and are normally absorbed into short-term government borrowing. And that's a whole different story, which we probably not dwell now. But because our capital markets are still small and shallow, there are few channels to transform this household saving into productive long-term investments. So there are some structural issues that are stopping us from really making some changes in terms of, or translating this into growth. Now, this matter, in my opinion, without a deep capital market, businesses will rely normally on banks or foreign financing as we see now, but increasingly changing with due to. I would really thank our two colleagues from the sector here. Their enthusiasm, their dynamics have actually really challenged the norm, and we are pushing forward. We expand during the tourism boom, but we lack the domestic investment bank to sustain the momentum and diversify the economy, I think. So the cycle really works like this, but a strong growth should create more saving, and those savings should fuel capital market. But this is where the real challenge comes. But unless we intentionally strengthen the market through instruments like corporate bonds or SME listing, as I think was highlighting too, or sustainable financial products, the cycle would not break, or savings would not flow into productive sectors. So that is where my answer to the question is, I think we need to embrace, or we need to start thinking from a system thinking. I know we all are working in our own areas, but we need to collectively think about so that this could actually translate into growth, and then the growth could ultimately lead to the whole capital market growth. We cannot afford to think only from our narrow perspective or narrow objectives. We need to think from the system perspective. Thank you.
Thank you. Before we move on to the questions from the audience, I would like to give an opportunity to all panelists to do a closing remark. Mr. Wahid?
Yes, thank you very much. I will not keep you between the questions, So, I think all the panelists have covered very important areas, but I would like to just add to the point that Mr. Rifat mentioned about the tourism sector. I think it's a very promising sector where the capital market can participate in the development and operation of resorts, guest houses. So we see that in Maldives, many hotels are now being owned by foreign investment funds. So there is a capital market activity, in fact. But we don't see that capital market activity in Maldives where funds are owning, the local funds or local capital markets investing in the resort sector. But I think it's a very important initiative that we can do, because this is a means where we can get the foreign currency, and this even we can structure the investment instruments where we can invest in rupiah and even get the return in dollars as well. So this is a very important thing that we can do, and with the spread of increasing activity in the tourism sector, especially in the guest house market, where the investment size, ticket size is very much doable for the capital market to participate. I think it's a very important thing that we can do. And I think that in the future, the capital market has a very bright future, and we would be, traditionally in the banking market, we are based our financing on the collateral-based lending, but I think we'll be moving from that into a more companies' balance sheets and their project-based funding. And with this, the capital market players will gauge the risks and invest. And also for the private investors, we would see that there will be more active participation from the retail investors as well, especially with the investment funds that are coming in. And I think insurance sector has also a role to play where they can also guarantee some short-term investments where the returns are guaranteed as well. So I would see these trends moving in the future and with more activity and participation and growth in the capital market. Thank you.
Thank you. Mr. Rifat?
Thanks. Like I said earlier, we would like to see more dynamism in the market. I think it's communication and collaboration is what is still lacking, or we need to improve. We need to work, the institutional investors and the market makers and the products, the people who list in the market. We all need to work together. I think there is a lot more we can do internally and also to generate external funds, because if we need to go, like I said, we need to look at how we could mobilize funds from overseas. We do have products that would attract foreign investments, and we also need to look at things from an investor protection perspective. Market confidence is very important. Legal protection, debt recovery, all these are very important. We do understand there are weaknesses from a legal perspective, which we could address if there was focus, if there was the will to do it, and we could do it pretty fast. And we need to speed up things. I think we are a bit slow in getting things done. We need to speed up things. We need to get our capital market going. There's a lot of potential where, as a country, we could benefit. We could bring the wealth, spread the wealth to the entire country. We need to get more people involved. We need to, at the grassroots level, at the very bottom, we need to activate these people, make them wealthy, financially empower them. That is where we will get real progress in terms of as a nation and in terms of capital markets. This is a very small country. We need to have we need to create a very wealthy population as a nation. I think this can be done.
Thank you. Mr. Wall?
Thank you. I will keep it very short. I have two words which I have in my mind which I think summarize this, and both of those words were mentioned by my good friends to my left. The first is participation. I think participation, very important, that we all participate as much as we can from an institutional perspective as well as from an investor perspective, so participation. And the second is collaboration. Collaboration is very important because we need to work together. We are stronger, the sum of our parts, when we work together, we are stronger than the individual components. So we must work together and collaborate, whether we are fund managers, financial institutions, banks, the market authorities, regulators, corporations that want to do this, investors. We need to work together and I think work for the greater good, because when we look at that, we're talking about growing the economy, the economic growth, the strength of this, I believe, is going to be, from a quite strong factor driven by the strength of the capital market. I mean, the economy has grown for different reasons. Obviously, tourism a big part of that, but I think I would say the growth is, despite the relative kind of infancy of the capital market, and I think we can unleash more growth by embracing the capital market, and I think that's really going to help the level of growth that we'll have in the future. And given where we are right now, I think there's good growth, but we also have many challenges. A strong capital market will help increase the transparency that we mentioned before, and I think the financial prudence, the discipline across many organizations, I I think there'll be other people who may talk about certain types of organizations that may be able to list and benefit from that. And I think a lot of those organizations will definitely benefit from having stronger governance, having investor expectations in terms of strong financial performance, which sometimes we don't consider. I think the private organizations will be very focused on the returns to their investors, to their shareholders, and we should embrace that. It's not a bad thing. Sometimes it's looked at and it's a bad, it's perceived, if I say, it's bad to grow, it's bad to make money. I mean, if you do things in the right way, if you're not, excuse my language, but if you're not screwing people over and doing unethical things, you should be focused on delivering something which people value, and in return, generating something good for your investors and your shareholders. And we need to embrace that. And I think that performance culture will benefit many organizations which don't quite have that at the moment. So again, participation and collaboration.
Thank you. And finally, Dr. Inas.
Thank you. I think from the pension office perspective, I see three priorities to unlock growth and confidence through market-based financing. I do agree with our the panelists, the panel members, in terms of there is still not enough dynamism. We need that. We need more and more participation, as Mr. Robin has highlighted. But I think the first, from my perspective or the pension office perspective, is to broaden the financing channels. Our economy still is very much bank heavy, and also we need to deepen the bond or equity markets. A clear government bond yield can actually anchor the corporate bond issuance, while instruments like green or blue bonds can actually fund renewable energy, fisheries, or ecotourism. These could actually attract global ESG investors. And I think this is where the real change could be made. Because our financial sector is small. Our financial system, unless connected with a global system, we cannot leverage on it. So that's number one. Number two, inclusivity. I think we have talked about it in the forum so far. But I would like to reiterate, we must ensure household and SMEs benefit from it, about the growth. Inclusive growth, that means retail-friendly mutual funds and digital platforms so ordinary Maldivians can invest in small amounts beyond the bank deposit. And I think a lot of effort has been done by Capital Market Development Authority, and also the stock exchange have been trying to push this. On the business side, a junior board at the stock exchange and pooled SME fund can open up an affordable financing for local enterprises, not just for the larger corporations. And I think these are just for us to deliberate and think about. The last is confidence, which I think we all agree on. The panel, investor trust depends on the governance and predictability. As the institutional investor, we lead by publishing the transparent allocations, adopting a stewardship code. Our board the management at the pension office give top priority on this. So we also demand perhaps stronger disclosure standards, and I think that is where a bit of tolerance from the market is required in understanding where we are coming from. So our apologies, but we still will continue demanding it, although it might be sometimes difficult. At the same time, a stable regulatory rules and partnership with banks or development banks can actually de-risk the new products, or signaling the foreign investors that Maldives is serious in this market. In short, I think I would be able to say on behalf of our team at the pension board and also the management, the pension can be more than a custodian or retirement saving. We can be a catalyst for inclusive growth, innovation, investment confidence, both at home and abroad, and we are committed in all these areas. Would really like to see the pension fund becoming a catalyst for development in the Maldives, more than just funding the Ministry of Finance. Thank you.
Thank you. So based on this discussions, I would now like to open the floor for questions from the audience. We'll begin with the questions on the screen, and if time permits, we'll also take questions directly from the floor. So we've had a number of questions already. So my first question is to Mr. Rifat Jalil. So what practical advice would you give to a small business owner who wants to scale up but feels stuck because of the limited access to capital market?
Thank you. That's a very, very good question. Yeah, somebody who wants to grow and feels restricted by capital issues, they need to, obviously their objective is to get find capital to grow. They need to get themselves organized. They need to become very transparent. They need to have a business plan, because the business plan gives confidence to the investor. And you have to have, normally you have to have a track record unless you have a really outstanding product that people would believe in. So developing confidence of the investor is basically what is required. It is through a business plan, or you have to have a track record. So having a solid business plan, having the right people with you will create access to capital, because only if you create confidence for the investor, you will be able to raise fund no matter where you are getting the money from, irrespective of whether it's a bank or an angel investor or a relative or your parents. You know, parents might help you, but then if you're going out of your comfort zone and then looking for capital outside, you would need a good business plan. You would need to have cash flow projections. So get yourself organized, and that's the first step.
Thank you. Next question is to Dr. Inaz. From your perspective, what are the key regulatory challenges currently facing financial institutions in the country, and which of these need to be addressed to foster the growth and deepen the capital market?
Let me keep it short. And also we have the members of the parliament here. I think perhaps this is just my opinion, but I think a strong, well-educated, a judiciary which understands the corporate sector is one of the major challenges that we are, I think, facing. And I think increasingly as the market develop, we would need the judiciary to be ahead of us, or at least working in partnership with us. I think that is what needs to be addressed. The second is market players. This comes also with the behavior of the government, in terms of the policies, the prediction, how far we can predict the development projects ahead, so that businesses can therefore plan ahead, plan alongside, what's the role of the private sector and so forth. So the discipline of the market players, partly governed by the regulations that we put in place, but partly the expectation and so forth. So these are, I think, in my opinion, two major challenges and what needs to be addressed. Again, I'm open for to know your views throughout this forum. Thank you.
Thank you. As we're running a bit short on time, I'll take one more question. This is a general question to all panelists. So moving away from traditional asset-based lending as companies practiced by banks to greater access to smaller players such as SMEs, how can investors be assured of borrowers' ability to repay? Mr. Wan.
I think that's a very good question. Firstly, I would like to say that there will be no return without risk. And I think investors who want to participate in this kind of investment should be very much aware of what they are participating in, especially investors who want to support the new entrance of the small businesses which is a high potential for growth. So when we make investors aware about this, I think there should be no issue that the investors want to invest. But we had to make the mechanism for the investors to access these companies who want to bring the investment. As I said in my last answer, we should have a platform where very small businesses can also come for the financing. Most probably they would not be at a size where they can go for a big listing. Maybe they would need some anchor investor who want to invest. I think the investment funds, they can help as an anchor investor and then do some hand holding, and then they can come to the market. But I think the most important thing is that the investor who has the appetite to know what it is, and I think there should be a good understanding of the business model and the promoters of the project. Otherwise, I would not see any issue for the investors to invest, because their investor appetite can be very different depending on the particular type of investor. Thank you.
Thank you. Mr. Robin Wall, would you like to add your perspectives to the question as well?
Yeah, I think it's very, every question is very good, by the way. I think it's another very good question. I think, like Wahid has said, I mean, if you're going to participate in investing, it does carry inherent risk. It shouldn't put you off, but I think, we need to have a risk appetite. I think it's a matter of what level of risk appetite do you have, and how can we give the investor, the lender, let's say, the confidence. I mean, the question is about investing or lending and the borrower's ability to repay. I think it depends on the type of investment, the level of investment, and who helps to give confidence. I think if we look at, let's say, whatever the level of product, if it can go through some level of scrutiny and potential regulation, again, without making that a negative thing. So, for example, if the products are regulated, if the companies who issue them are subject to scrutiny and regulation, without that being seen as a hindrance, it will give confidence. I think if somebody just does something and it's outside of the system there, it's probably prone to higher risk. Sometimes people will want to do things that are, let's say, more specific, whether it's for startups. If I look at, let's say, entrepreneurs who maybe have an idea, but they haven't got an established base, they don't have proven financials. Maybe a business plan is theoretical, so they're not going to get easy access, I would say, from traditional means. It's going to be higher risk, but people may have confidence in that, but it's probably high risk potential for high return. So it really depends on your appetite. And I think investors probably need to look at educating themselves a little bit so that they're aware of the kind of things that are out there and what kind of risk appetite that they have. I think anyone who's willing to invest should be conscious of that, but also probably not putting all your eggs in one basket if that's an individual level, even if you're a corporate. Even I think if you were to look at the pension office, you wouldn't put all of the funds in one investment. So we need to look at that. And I think maybe the way certain persons in this room can help, if I put it that way, or potentially beyond this, I'm talking about, let's say, giving confidence. So if we say like regulatory bodies or others who can create this kind of environment where we can say, you know what, this product is subject to a certain regulation, or it's a certain rating, or it's a certain risk level, okay? Maybe fund managers and advisors, they can actually produce things which actually explain risk ratings to investors so that that helps them to understand, because even if I say the most financially literate of ordinary investors probably would not be able to reach an exact determination. If you discuss with different people on something without some professional body with a robust system advising you, you would reach different conclusions. That's natural. We were talking before about embracing differences, I think. That's great. We should do that. But how do you look at this then when you're concerned about your return? You don't want to do something, let's say, which has got a really high risk of default if that's not in line with your risk appetite, but you don't know. So if some of these things can be developed to help investors understand what they're actually investing in, then I think that can only be a good thing. And obviously, I think the more mature, let's say, the more access to financial information you have, if that company is producing financial information, if the mechanics of that are sound, they've got a strong balance sheet, they're profitable, they're generating cash, generally these things would be safer. Obviously, if you're looking at investing and the company doesn't seem to have much in terms of capital, they've got high indebtedness, maybe they're loss-making, you should generally be concerned. So I think it's a little bit of what we could do maybe as a community. I talked before about working together and collaboration, but also I think everybody needs to take a certain level of responsibility themselves to try to educate either individually or for their organization so they know what they're doing and what they're prepared to invest in as well.
Thank you. We've heard valuable insights from business leaders, market intermediaries, perspective of a listed company and institutional investor. A few clear themes stand out. So strong governance and transparency are the foundation of market confidence. Both issuers, institutional investors, and retail investors are vital to an inclusive and resilient market. Expanding listings and secondary trading is key to unlocking finance for growth. I trust this has been a constructive and thought-provoking discussion. With that, I'll bring this panel to a close. Please join me in thanking our esteemed panelists for their time and perspectives, and thank you all for your contributions, and we look forward to the remaining sessions of the forum. Thank you. Thank you.
I would now like to invite our panelists to stay on stage for a quick group photo.
I think Korea.
Thank you, panelists. We hope this discussion offered meaningful perspectives for all participants. The discussion has highlighted the untapped potential for the capital market to complement traditional lending avenues by offering businesses stable long-term financing and the role of strengthened governance and investor confidence in building a more resilient capital market. Next on the agenda is the presentation on capital market evolution in the Maldives, regulatory milestones, and the road ahead. The presentation will be delivered by Mr. Abdullah Zakaria, Director General of the Pension Supervision Division of CMDA. Mr. Abdullah Zakaria has served as chairperson of the local committee that developed the Maldives Sustainability Reporting Framework, shaping national ESG reporting standards. He is also the chairperson of the academic committee at the Institute of Chartered Accountants of the Maldives and has extensive experience in financial strategy, corporate governance, and investor education. Please join me in welcoming Mr. Abdullah Zakaria to the stage for his presentation.
Bismillahirrahmanirrahim. Assalamu alaikum and a very good morning to everybody. I would first of all like to thank the management and chairperson of pension fees for this opportunity and for our CEO giving this opportunity for me to do a presentation on capital market evaluation. I would like to begin with what we have seen over the years. Going back to around 1940s, we saw companies like Gaumi Equity Kamukkumfuni, which was established in 1948, and even then we were able to see some of the disclosures of that time in newspapers. So this is a sort of a reproduced version of a newspaper clip from 1962. And you can see that the market at that point in time developed with the sense that, these are good investments and the returns are really good. Payouts, generally we saw payouts around 95, even 99%. So it was done in a way, without having much, infrastructure going forward or machinery needed, because there was no need to have that kind of construction and, buildings and so on. So that was that day. And you can see the return from there in 1962 publication, which shows that it is around 22%. For Gaumi Equity Kamukkumfuni. Then there was another in 1955 called Might Company, Maldives Industrial Trade Establishment. This company also issued shares to the public and has survived. And you can see the summary reports published back then. Very brief. These are news clippings and not actual financial reports. And you can see auditor's name and all the other details in there. So which shows that even historically people had that kind of appetite for investing and capital market growth. The contents, we'll be talking about historical developments to some extent and then going for formalization of capital market, market expansion and listing, strategic reform and digitalization initiatives, and future of capital market. So, as I mentioned earlier, right, 1948, so the first public company that issued shares, and the shares were sold at 10 rupiah and kept at 10 share per person. So there was, limited offer, and then there was still opportunity in terms of increase in financial depth and sort of going for inclusion or financial inclusion, right? And this was at the backdrop of foreign control over fisheries and so on. So it gave opportunity for Maldivians to take advantage of fisheries industry and benefit from that. And then 7 years later, MITE was formed and it had similar sort of operations. There were other companies that came along, and because the short presentation, I don't have all of those. There was another called Sada company, which was later merged. And, there are different stories or different versions of truth when it comes to why these companies got dissolved. And some say, somewhat political and so on. And others say, the sustainability of these businesses. And I was going through some old notes from a historian and then reached one other person who is aware of these things. And his opinion is don't listen to the other person, right? You should never trust anything this other person says. So this is where it was. So we didn't have much of that kind of detail. Then in the 1980s, right, Maldives Transport and Contracting Company, MTCC, for the first time, the modern day capital market operations we see started with the MTCC issuing 250,000 shares in their IPO. They traveled throughout the Maldives, went to all those atolls, and even till today, we have some of the difficulties in establishing ownership of some of these shares, because there was, if I remember correctly, there was one case where, in a certain island, the shares were owned by Masweringe Gulung, and there was no association, so it's a set of fishermen coming together and buying shares. So these difficulties are still there. Anyway, but it was one of the best, I think, in terms of reach and financial inclusion in its entirety. There were more developments in the financial sector, for instance, 1982, with the establishment of banking services, and then we had Dirag established, expanding modern telecommunication as we see today, that serviced beyond capital city and connected. There was, walkie-talkie operation prior to that, as far back as 1960s. Then in 1999, the formal structure of modern-day capital market began within the central bank, within Maldives Monetary Authority, with the formalization and establishment of division within the Monetary Authority. In 2004, we saw the State Trading Organization, or STO, that became the first listed company on 14th September. Right. 2006 was where, CMD, or Capital Market Division within MMA, was to become an independent institution, and with the Maldives Securities Act. And that created Maldives Stock Exchange and securities depositories along the way. And 2006 was a year that had a lot of things going on in terms of capital market formalization, including getting a consultant from Singapore to do the first assessment of corporate governance situation in the Maldives. And in her report, Kala Anandaraj, came up with a lot of recommendations in how we go about reforming, how we go about these things. And this code was voluntary from 2007, and from 2008 onwards it was mandatory. So at the development stage, we had enough time and space given to the companies to comply with these regulations. Then through the next decade, we saw some expansion, with the establishment of MRPS, right, with the establishment of a pension office, actually. We saw the institutional investor in action, and the market landscape has changed as a result of that. And we have other companies coming along over the next decade up until 2019. Right, so we saw, for instance, Centurion PLC, the first non-financial sector private company to be listed, and then we also saw Uridu and Maldives Islamic Bank getting listed. Within the CMDA, there has been, some initiatives to digitalize, especially since 2021 onwards. We have moved to cloud. We have a public disclosure platform which allows listed companies to actually submit their filings in one platform rather than, investors having to visit 9 or 10 different companies' websites and try to comb through this information. We also have developed a restricted persons management system, licensing management system. We are trying to automate as much as possible. And currently there's work being done on training management system, and then there's also possibility of going forward with prospectus vetting and so on. The major developments in terms of amendments to regulations, since 2021, we have started reviewing all the existing regulations, some regulations-wise, old as a decade and so on. So in that process, we have tried to create an enabling environment for businesses. The best practice, all the regulations tend to cater for more developed markets, and therefore it also is an impediment to some extent for growth. So some of these amendments, such as the amendments brought to prospectus regulation, incorporating private market, aim to cater for these needs. Our MASIX, right, Maldives Stock Index has grown considerably since 2002. Right. For comparison purpose, I have started from August to August. For comparability, the actual index started back in May. The MASIX shows annualized change of about 17.2% from 2020, and mind you, from 2019 onwards, we haven't had a new listing in the primary market. So this is really actual growth of existing companies, and shows an index of 17.20. So in terms of return, we're doing very well. So we need maybe to work more on financial literacy to bring in more participation or more participants. For the similar periods, we see FTSE with 4.27 and S&P 500 at 15.76. And these are the data from those. And we have seen over the last 2 years, actually, 8 more offerings come into the market, bringing the total to 18 in terms of market participation. And you can see also the diversification of the capital market right now. For instance, you can see health sector represented. We have IKEA, we have MedTech, we have ADK Hospital as well, issuing bonds and sukuk respectively within the private market. And we also have IUM holdings, right, education sector. As we know from experience from other countries, the country's capital markets do very well if the sectors are well represented, right? In Maldives, we are looking at tourism, real estate, and fisheries, and so on. So these industries still have to be well represented in order to have a flourishing capital market. These are some statistics. We have had 9 equities listed, raising about 118 million USD in total. And main market had 8 debt instruments listed, and within the last 2 years of private market, we have raised around 460 million MVR, or about 30 million USD for by private companies. And this is one of the best things that has happened in recent times, because this gives an opportunity for retail investors to register on Vienna platform and actually get good returns for their money they have. Oftentimes I asked this question, how much do you think you get in terms of return by keeping passively your money in a bank typically? And almost always, I hear about this 5%, I don't know where it is coming from, but I hear about 5%, and then I ask them, okay, search, go, check bank by bank, and see what is being offered. And, capital market is giving returns in excess of 11-12% on average. And you're going to compare it with, 1.48%, really. You offered 2% in savings account if you have 5 million, and, average person doesn't have 5 million in their bank account. Okay, now market capitalization over the past 2 decades or so have considerably increased. For instance, since 2015, we have seen about 349% improvement. If you look at, from 2020 to 2025, the figure I have here is actually for August 2025. You can see from 17 billion to 36 billion, so more than doubled, right? And there is a market has appetite for really financial products. If you look at the Maldives Stock Exchange website, you can see a lot of buy orders but no sell orders. A lot of people are buying and holding, and I believe, that's personal way, I believe there isn't enough float and there needs to be more sectors represented, right? For instance, countries like Nepal, we hear about Nepal now a lot, but Nepal has some good things, like they mandated banks to be listed and as public interest entities, and we could have brought, we could bring 6 more banks or so, right? We have access to finance opportunities under current framework, equity listing, corporate scope, investment, and so on. Then, as I said before, economic diversification is key. And in diversifying, we have to ensure that the sectors are well represented, and we don't see as much as tourism sector as we would like, and fisheries as well, and construction. Right. We have some initiatives like green, blended finance, regional integration, so on. The ongoing initiatives include new prospectus regulation, and sustainability reporting framework has been issued last year, but we wanted to develop detailed toolkits over the next few years and so on, because sustainability reporting is going to be mandatory next year onwards. We also have other initiatives like foreign investor regulation and so on. There is in the pipeline virtual asset regulation, regulatory sandbox framework, and regulation on credit rating. And regulation and asset management is in the process, and in future we can think about and go ahead with depository bill and trust law as well. And I wouldn't be between you and your lunch. Thank you.
Thank you, Mr. Abdullah, for that enlightening presentation. This concludes the morning session of the Maldives Finance Forum 2025. We will now break for lunch, served at Vihamana Restaurant, and will resume at 1:30 p.m. Our officials will be present to guide you to the restaurant and assist you. We kindly request all participants to return to the forum hall by 1:25 p.m. For your information, the restrooms are located to the left of this hall for prayers. The mosque is located just outside. Simply take a right turn from the hall, walk along the pathway, and you will find the mosque ahead. Thank you. Assalamu alaikum and welcome back everyone. We hope you had a pleasant lunch. To begin our afternoon session, we have a presentation on lessons from global markets, institutional investors, and limited disclosure markets, delivered by Mr. Henrik Cruz, International Investment Management Consultant. Mr. Cruz is a certified European financial analyst with over 31 years of experience, including 2 decades at the C-level, across investment management, development banking, private equity, and SME finance. He has also served as an international expert in pension investments, credit guarantee schemes, and SME finance for global organizations such as the International Labour Organization ILO, International Social Security Association ISA, GIZ, and the World Bank Group. Please join me in welcoming Mr. Henrik Cruz to the stage.
Good afternoon. I hope you had a very good lunch. I had. I would like to thank Dr. Inaz and Sujata for the invitation to be at this forum and greet also CMDA to have associated with this initiative that I learned has been for a long time now, since 2012. I was asked to talk a bit about this topic, lessons from institutional investors and limited disclosure. And here is the agenda that I will follow. So I'll start by describing what is financial markets infrastructure and the key risks that usually are associated with the financial markets infrastructures. Then I will touch the topic of disclosure, mainly why disclosure is important. A specific one on SRI and ESG disclosure, some good practices for us to discuss, and my final remarks. Financial market infrastructures are like the plumbing system that channels savings to investments. We have households that mostly save, and we have companies and government that usually invest. So to channel savings from one to the other, we need a network, a platform, a set of relationships between institutions, the so-called market participants, that we need to regulate and we need to monitor. And these platforms, of course, they are also exposed to risks. The main one is systemic risk. Systemic risk may happen if some of the participants, one of the participants, for example, fails to deliver his role, and then the whole system stops. So channeling savings to investments is stopped. So this is why systemic risk is the main risk that financial market infrastructures face. And it is also, as we are going to see, one of the main concerns of the regulators. Legal risk, credit risk, and liquidity risk, also very important. I will here highlight legal risk because the legal framework is paramount for defining how these financial market infrastructures work and mainly to give trust and confidence to market participants. Credit risk, if there is one of the participants that is not able to fulfill your responsibilities, we have a problem. And liquidity risk, if we buy a security and we send the money and eventually the seller doesn't receive the money in exchange by the security. But there are also another set of risks because market participants, they follow a business model. They are operating the financial market infrastructure for a profit. So there is a business behind this that may be misrepresented or may be not working so well. So the financial market infrastructure may not be effectively managed. Custody and investment risk, this is related to securities and the topic of safekeeping the securities, and also the investment risk because the entity that is managing the platform has also his own resources to be invested, and if he is doing that investment badly, he may suffer and not be aware to keep the business on. And of course, we all know that operational risk is always present. So this is to say that a resilient market, a resilient capital market, needs a resilient financial market infrastructure. And this infrastructure, as I said, involves a lot of participants. The government, the regulator, the banks, the investors, the investment managers, the custodian banks, all of these entities are involved in this network, so savings get to be invested. IOSCO is an international organization dedicated to draft good practices on securities management, and he has made some assessment of regulators, a set of regulators, and came with a specific set of recommendations, mainly to regulators, so they can manage and oversee the financial market infrastructures. And you can see here that systemic risk is all over the place. So one of the main concerns about having a resilient capital market is systemic risk. So this is why we have regulators, we have laws, we have someone that is taking care of the financial market infrastructure. My second topic is about disclosure. I've been asked to talk about the impact of limited disclosure, and I believe the reason was because here in the Maldives we are having a new market platform that is listing more and more securities on a private placement basis. And private placements, private securities, private companies usually disclose less than those that are listed in the main markets. And information disclosure is important. Why? And I ask your patience to go back to 1970 and listen about this paper from Akerlof. And for my knowledge, it is the first academic that dedicated to the discussion of this issue of quality and uncertainty. He says that there are incentives for sellers to market poor quality merchandise. And why is that? It is because they know better the product. If I'm a company and I'm going to issue security, or if I'm going to ask for a loan, I know more about my company than the bank or the investor does. So I will try to share the part of my business that is the poor part of my business, because the good part, I will keep it to me 100%. So Akerlof says, this is not good, because the end game is that only the bad products come to market. And this is a problem for government as well, because for the social benefit of the community, we end up having only bad products being traded. And this is not good. So that's why we need some kind of intervention here. And he also talks about the economic costs of dishonesty, because he says we have to face this question, why business in underdeveloped countries is difficult. I would change countries for markets. It is difficult because information is scarce. And when information is scarce, we are not able to distinguish between good products and bad products. And Akerlof develops the Lemons principle. The Lemons principle is about second-hand cars in the United States that are known as lemons. So if you buy a car, you know if the car is good or is bad because you start driving it, and after a few months, you know the car is good or is bad. If the car is good, you keep it. You don't sell it. But if the car is bad, maybe you'll be open for a trade. And second-hand car is even worse, because second-hand car is the example where the owner knows it better than the buyer. So if I have a second-hand car that I know it is a very good second-hand car, I won't sell it. Which means that only the bad cars, mainly the bad second-hand cars, will be traded in the market. And this means that because the price is the same, because we have only one price in the market, bad cars and good cars have the same price. They are valued at the same price. So this is not good, because we end up trading the good things at the same price as the bad thing. And this is what is usually called the asymmetry of information. And there is a very bad end result of this, because if this is the case, people realize that they are only trading bad products in the market. So it means that if there are only bad products available, we just don't want them. So the market is driven out. The risk is that our market is dead, and we don't want that, right? So we need to handle this problem, and Akerlof gives some clues on this, but he also states that in underdeveloped markets, the variation of quality is even larger. There is not just bad cars. There are bad cars, almost bad cars, almost bad cars, and good cars and not that much good cars, but they all trade at the same price. So when you have a variation, a very large variation, the problem gets bigger, because the people, all the people that are not trading bad cars, is suffering. So social welfare is negative. So Akerlof comes with a few ideas of counter this problem. In a commodities market, commodities not in the sense of gold, but commodities in terms of merchandise, what you can say is ask for a guarantee from the seller, which means that if the seller gives you a guarantee of quality, it means that if you are buying a bad car, you have the guarantee to reclaim and get compensated. So guarantees are one way of doing things to counter this problem. Brand names as well, because brand names means that the seller is going to sell more times in the future. So he has no incentive to sell a bad product, because he will need to sell it again and again in the future. And licensing also can play a role here, because if there is a third party certifying that the product is good, or the profession is well conducted, then you get trust. So this is all about trust. Trust on the quality of the product. And this also applies to financial markets, because someone in the morning said, we need more products, but we need good products. So for us to certify that we have good products, we need some third institution like CMDA. And we also need the companies to issue again and again and again the idea of the brand name of the company. You do not just do the first IPO. You should be incentivized to do another time and another time. So you kind of improve the quality of your product because you want to come back to the market in the future. Allocation of savings to investments is really important, and disclosure is part of the game. Because if you are going to a bank to get a loan, the bank will wonder, why are you asking for the loan? And when you tell the idea of the business, the bank will look at you and say, why don't you do the business on your own? Why are you sharing the profit of the business with me? Maybe it's a bad idea, this business that you are presenting to me. So you have to assure the bank that it is really a good business, but the loan is to grow the business, sharing the profit with the bank as a partner. The same is true for IPOs or for venture capitalists. When you present an idea, you should disclose as much information as possible so you get the trust from the venture capitalist to be your partner. So, disclosure, again, is a critical factor to build trust and to succeed on getting a loan or to succeed on getting a partner. How can corporates do disclosure? There are several instruments to do that. You can see here a list of them. And about this, I would only also to add to this set of instruments for good disclosure that there are a few questions that academia is looking at because of the importance of corporate disclosure. For example, why is there a need for regulation of disclosure in capital markets? We have seen that before. Why? What types of disclosures should be regulated and which should not? How effective are accounting standards in facilitating credible communications between managers and outside investors? What factors determine their effectiveness? Which mandated disclosures should be recognized directly in the financial statements and which should be included as supplementary disclosures? Auditors. How effective are auditors in enhancing the credibility of financial statements? Managers. What factors affect managers' disclosure choices? This is a very important topic because of the agency problem. A manager has its own incentives when running a company. That's natural. So if you don't align the interest of the manager with the alignment of the lender or the investor, you may end up with the manager extracting value for him from you. So alignment of interests of managers with investors and with shareholders and with lenders is very, very critical here. How do investors respond to corporate disclosures? Are firm disclosures made outside the financial statements credible? And it continues. So these are questions that it is important to consider when talking about corporate disclosure as a critical factor for trust in the market. And then I find a few other papers on the impact of disclosure. And there are some interesting and curious conclusions. Recent studies say, for example, that when you are reading financial information that you are not very familiar with, so you are learning about this topic, the studies conclude that that impacts negatively the price. So if you are not fully aware of the topic, you may end up taking wrong decisions about it, about the consequences of that piece of information. But if you already know about the subject, then price informativeness is really improved. So this means that literacy, financial literacy, is critical as well, because you need to know about the financial topic that is being disclosed. Banks have a natural advantage in monitoring and credit coordination. And why is that? It is because banks know your treasury. They know your bank account. They know what's going on because they see the flow on your bank account. There are banks that lend money only based on bank account movements. So the flow, the cash flow, is really critical, and that is an advantage for a bank. But bonds, when issuing a bonds, you do not share your cash account with the investor. But bonds are characteristics of superior risk sharing. And why is that? Because they are usually long-term. They are not short-term. So they are a stronger risk-sharing instrument in the market. But there are good news here for those that are looking at private markets. And the good news is that global investors tend to reallocate capital to private markets from public firms when private firms are really transparent. So if you succeed to be transparent in a private market, you will attract money from international, from listed markets and from public companies. A particular topic about ESG disclosure, which is really a new thing going on these days. And you know that there are no standardization yet about ESG disclosure. There are some recommendations, some UN principles how to report this information, but there's nothing like accounting standards, for example. So we don't have standards to report ESG. And it means that we have here a market failure, let's call it that way. The reporting on ESG disclosure may be misleading because you cannot compare two companies that report in different ways. So standardization is a problem, but ESG has really a big impact. And one of the most important things about ESG is climate risk. And you know that climate risk is a very impacting risk. When there is an event, there is a problem, a serious problem. And the companies need to disclose this just because they want to stay in the market. Investors do not like uncertainty. They like predictability. So if they are surprised by an event that was unknown from former reportings, they will not invest again in this company in the future. And the final part of my presentation is about some good practices on this topic of resilient markets and limited disclosure. I will start about resilient markets. The IOSCO standards are well known. I've just put it here, the IOSCO policy and standards, for one reason, just to illustrate the broad set of areas that regulators need to cover to ensure that we have a resilient capital market. And you can see there is issuer accounting, audit and disclosure. There is regulation of secondary markets, regulation of market intermediaries, enforcement and exchange of information. So you can see the long set of topics that disclosure and management of financial market infrastructures needs to be overseen. So we really dedicate it to SMEs mainly and to companies that do not have a trading history, a trading track record. So you can list an SME in this market, and the access to this market is easier in the sense that you don't need to be a big company, you don't need to have track record, and you are somehow exempt from some disclosure of information. These sections about dissemination on website, periodic disclosure obligations, disclosure of certain events, they are exempt to comply with this. So this is an example. I will not detail on this, but if some of you are curious about these best practices, you can have a look. It is a good one. And then 2 country experiences. When I select these 2 country experiences, of course, I was thinking about the Maldives. And Malaysia, why Malaysia? Because Malaysia not only has Sharia-compliant financial instruments, which is something that you already are developing here in the Maldives, but because it has a long time story of building a capital market 25 years back. So it is really a nice experience. It is a big country. That's the main difference with the Maldives. But to have a small country like the Maldives, I selected Mauritius. Mauritius is also a successful story. We will see in a minute why. That opted to develop a international financial center locally to attract capital, to attract money for this jurisdiction. Malaysia, the key lesson from Malaysia is that long-term investors are vital for the success and for the resilience of the market. And why is that? Because long-term investors, they keep investing more and more. And they stay there. They are providing liquidity. They are inviting other investors to join. They are giving credibility to the local market. So long-term investors like insurance companies, like pension funds, like housing financing companies, they provide liquidity, they provide resilience to the market. And there is also a government role that was played in Malaysia, which was the government itself issuing bonds and building a yield curve, so these long-term investors can have really options in the market, the so-called good products available. And they created also a housing company, Kagamas, that mainly was, collecting money from households and lending for the long term for housing loans and for housing policies. So because housing is a long-term investment, this company was there. It was a long-term investor itself, and it was really a promoter of the market in Malaysia. And also the Employees Provident Fund played a role on this as well. But don't forget, Malaysia is now one of the most important Sharia-compliant financial centers in the world, not just because of EPF and Kagamas, but because they succeeded to attract other investors domestically, but also from outside. The other example, Mauritius. Mauritius went a different way. They decided to be a tax haven, but they developed financial services locally. So they start doing fund administration. So any fund that wants to be domiciled in some tax haven jurisdiction have an option in the Mauritius. But the paper that I just mentioned here refers that Mauritius really succeeded quick on attracting money, on attracting foreign exchange. But now that movement is being somehow exhausted, and they are facing a problem because fund administration is a low-value service, financial service. So they are being somehow challenged by AI, for example, and for other kinds of solutions that just bringing down the value of fund administration. So really Mauritius need to move up the value chain in financial services so they can still attract money and investments locally. And I'm coming to my final remarks. Wrapping up, financial markets are built on trust. Participants need trust on the financial market infrastructure, as we said. All the risks need to be managed. And trust is the basis of trading. Because we give money to get back securities, because we believe we will get the securities. All right? The other topic is about fair market price. This has to do with liquidity and also with transparency. Fair markets is about getting a buyer or a seller at a fair price. And it is also about transparency, as we have seen before. Disclosure is a critical factor to make a fair price of a good. So fair prices are based on liquidity and transparency. Unfair market prices may lead to the closing of a market, because only the bad products remain there and people get not interested on buying bad products. And corporate disclosure is critical, as we have seen, for an efficient capital market. Systemic risk, the cornerstone of regulators' role, because it is mainly the big risk that we face in a financial market infrastructure. All the participants need to be effectively participating in the market, and regulators have really here to identify, monitor, mitigate, and manage systemic risk. We have in capital markets two sides, the demand side and the supply side. Long-term investors, they can provide for the demand side, in the sense they are buying securities. But you also need to provide securities to the market. So we need the government, we need the corporates, we need other non-financial actors, financial as well, like banks, but we need other actors issuing securities, issuing good products, so the market really has a larger opportunity set for long-term investors. And here, let me just make two very final notes. One is that I have seen this morning, I have learned this morning that a big development is underway here in the Maldives, and big expectations you have for the near future. But don't forget that the rupiah market is limited in scale. You have 500,000 inhabitants, 500,000 potential savers in rupiah, but that's it. So you will never be an international big financial center for plain vanilla financial products like government bonds or corporate bonds or local companies' IPOs. So you really need a game changer here. Of course, MPAO can play a role here of dynamizing the market, dynamizing the local market, but that's it, because the scale is not there. Otherwise, if MPAO succeeds to enter the international arena and bring in other co-investors, not only for local investment, but for investments outside, but also bringing in international actors to the Maldives as co-investors, then the market will be growing. You know what? The pension funds in each company, in each country, and the development banks, when they exist, are really the dynamos of attracting foreign money to your country. The second note is about, okay, if rupiah is limited market, what can we do? I have a suggestion for you, which is to develop one brand that is very natural to the Maldives, which is the blue economy. My suggestion to you, and I know that there's some work already being done, is to transform Maldives in an international financial center for the blue economy. That will be different. That will be something that is thematic. It does not need to be big, because it is still in its early days, and it will differentiate the capital market in the Maldives in your favor. That's my final note. Thank you again for the invitation. Thank you.
We thank Mr. Cruz for sharing his insights from global markets and institutional investing, offering timely lessons as we work to advance the Maldives capital market. Next, we will proceed to the panel discussion of the afternoon session, Governance, Infrastructure and Safeguards, Foundations for a Resilient Capital Market. The distinguished panelists for this discussion are Mr. Mohammad Hussain Manik, Chief Executive Officer, Capital Market Development Authority, CMDA, Mr. Mohammad Aushan Latif, Chief Executive Officer, Maldives Stock Exchange, and Mr. Henrik Cruz, international investment management consultant. The discussion will be moderated by Ms. Hawa Fajua, Chief Financial Officer of the Pension Office. I kindly invite the panelists to take their seats on the stage.
Good afternoon, everyone. It's my pleasure to welcome you to our second panel discussion of the day. In this panel, we turn our attention to a subject that forms the foundation of financial stability. Governance, infrastructure, and safeguard as the building blocks of a resilient capital market. My name is Hawa Fajwa, and I will be the moderator for this panel. In this discussion, we will explore how recent developments have shaped the resilience of our markets. How can we enhance their attractiveness to both investors and issuers, and how reforms in regulation, supervision, and governance can foster fairness, transparency, and inclusiveness. We will also reflect on the role of technology in driving efficiency and the critical contribution of intermediaries and policymakers. To lead this important discussion, we are privileged to be joined by three distinguished panelists. Our first panelist, Mr. Mohammed Hussein Manik, Chief Executive Officer of the Capital Market Development Authority, brings over 4 decades of public sector leadership and financial regulatory expertise. Under his guidance, CMDA has expanded market access and strengthened governance in capital market development. Next, Ms. Mohammed Aushan Latif, Chief Executive Officer of the Maldives Stock Exchange and Maldives Security Depository, has been instrumental in driving regulatory reforms, compliance practice, and product innovation through technology. With more than 14 years of corporate experience in Maldives, Singapore, and Australia, he continues to shape the future direction of our capital market. And finally, Mr. Henrik Cruz, International Investment Management Consultant, is a certified European financial analyst with over 30 years of global experience in investment management, development banking, and SME finance. He has advised leading international organizations including ILO, ISA, GIZ, and the World Bank. Ladies and gentlemen, please join me in welcoming our esteemed panelists. Welcome to the panel, panelists. Before I move ahead with the panel discussion, I would like to note that during the discussions, throughout the discussions, you can submit your questions through the QR code displayed on the table. To start us off, I'd like to ask Mr. Manik, as highlighted in the morning's presentation by Mr. Zakaria on the evolution of the capital market in the Maldives, the market has achieved notable milestones in terms of regulatory development and governance. Could you highlight the key steps planned to enhance the robustness and resilience of the Maldivian capital market going forward?
Thank you for the opportunity to be on the panel. Let me first of all thank the MPAO chairperson, Dr. Inaz and Sujata, for giving CMDA the opportunity to present our case here. And it's the 12th year of Maldives Finance Forum. I think I would like to also note that the topic for this year's forum has been basically capital markets, and much has been said already. I don't think we need to go into detail as to how important this event has been for the capital market side in terms of discussing our way forward in terms of doing this. Now, what I would like to note also is we have with us a consultant from ADB, now currently basically undertaking a study of the capital market situation in Maldives, and he will be coming up with a report by the end of this year, how a way forward for the capital market side. And I think this forum has basically placed for him also a very good opportunity to guess what it is, or basically gauge what the capital market in Maldives is all about. Now, let me first start with a statistic. Excuse me, I'll take a few minutes to do this one before I get to the actual question. Now, for the pension office, I think their assets under management is now
26 billion.
26 billion, right person to ask also. So now, if that is the case, within 3 years, they are going to be bigger than the Bank of Maldives in terms of deposits that the Bank of Maldives has, the largest bank in the Maldives. So I think this really brings to our mind the seriousness of the pension fund as it is going forward. And capital market is an essential part of the pension fund. This I have to say, honestly. So the topic they have chosen is because the pension fund needs capital market for them to do what is right. Capital market needs to be developed. Now, it is also true for the capital market. We need the pension fund to be an active participant in the capital market in order to capital market to succeed. So, having said that, I think it's the importance is established. So, I'm speaking basically one other aspect is just it comes to mind. One other point I want to make is now we have had morning discussions here how difficult a task it has been basically to for the investments of the pension office, basically to look after them as trustees for the board and investing in public, what is the balance that needs to be established. Now, I'm speaking, it's a difficult fiddle for anybody to play. You have basically members' money that needs to be invested by law to make a return. And you have to invest, you have to invest. But then what are the best practices that you can come into the market in terms of products as well as governance and as institutions to invest these products. So my question, I wanted to ask Dr. Inas this question in the first panel, but since we didn't have much time from the floor, what I wanted to say is now, in creating the balance, the pension fund is basically designed to give a member choice in terms of investments for members. Now, the members, I was talking to Sujata, already has that choice in a way because they are investing in Sharia compliant products versus conventional products. They already have the choice. But what I'm getting at is in terms of risk that the members have to take. Is there, the design is such that some members can take increased risk on the pension fund they have saved. Because, you know, now if MRPS is conservatively invested, it will be basically it will eventually end up with government treasury bills, 4.3%, somewhere around there. So, but there is a challenge to increase that investment for the, as Dr. Inas previously said, it's the members' interest that drives the investment regime forward. That has to happen. So members' interest is what? To keep the money safe, plus get a reasonable return. So this is what I wanted to make on this one. So I'll get back to the question. Now, in terms of what we have been doing forward is basically, now, I think financial inclusion is something that we have been trying to do in terms of what you call to take the robustness and the Maldivian capital market forward. Now, the recent introduction of Vienna, I think, has done wonders for the capital market side. And obviously, it's not the introduction of this platform that has driven forward. It is also the work of the advisors and the timely, what you call, coming forward of some of the advisors that brought this forward. So many private sector businesses have been able to list and raise money, close to $500 million rupiah they have been able to raise. But it's a challenge, like Mr. Cruz has said, we don't want bad melons to be on the market, so for someone to invest. We want good melons to be invested. So that's the challenge we have to make in terms of doing this. Now, the other activity that we are taking forward is foreign investor regulation, making some changes in terms of the law that we have at the list. And now we are drafting regulation. It's almost complete and needs to be really gazetted. Once that is done, we will be able to implement it. We are almost there in terms of what you call digital platform. Writing work is already undertaken, so this is also happening so that the banks as well as the system can basically be prepared to receive foreign investors into the capital market side. Not as a foreign direct investment, obviously that is under the Ministry of Economic Development and Trade. Yeah. But certainly foreign investors can directly invest in the capital market side. Then the other part is basically enhanced governance. Then for the governance part, I think we can't stress enough. Transparency in governance in capital market is essential for anybody, for that matter, to invest. So that has to happen. And I mean, I am what you call a lobby. I have been lobbying for all companies, both SOEs and private companies, to improve governance. My life has been basically given to that kind of thing. So it's corporate reform that I'm interested in, and I would love to see SOEs as well as private companies come into the capital market. Obviously, what you call a condition is basically governance and transparency is something that needs to happen before anyone think of coming to the capital market side. That's something that needs to be said. Then the other part basically we are trying to do is review of current regulations. I mean, Abdullah in his presentation said. So we are trying to basically unlock any locks that are on the side of the regulatory regime to make sure that there is some sort of what you call flexibility or orientation or adaptation for the market to develop. Obviously, with regulatory oversight. So that's the main things that we are looking at the moment. Thank you.
Yeah, sure. I think Ocean wants to add some point. It's not working.
Hello. Hi, good afternoon, everyone. First of all, quick thanks to Shujata and team for organizing this event and obviously selecting this topic, which is quite close to our heart and also of national interest, the capital market. I just wanted to add that, since Manik took over, he has touched almost all regulations, or is actually trying to do so, and that has actually made real impact. Closed long-standing gaps in the market and moved our market closer to international standards. So that's really good. And what I find encouraging is that regulation is not being treated as a brake on innovation. which is why, Vienna actually came to life. That's 3 years of work and 3 years live now, so you can see the difference it has brought to the market. So I just wanted to say to you on stage that, the CMDA's role has been quite in delivering the dual role of regulator and market developer. But talking about resilience, I just wanted to add in that it's not simply about regulation. Technology actually plays an important role in it, and at the exchange and the depository, we have been developing softwares for the market, and currently there's an end-to-end digital backbone that supports the capital market, from automated trading mechanism, most recently to online subscriptions and online voting systems as well, and so on. And currently we are trying to upgrade our central securities depository systems. It's almost there. So that completes the entire infrastructure of the exchange and depository. And we take a lot of pride in it because if you compare to the other frontier markets, we are far ahead of them, building foundations in terms of technology. And the concept of resilience, I just wanted to add in that there's different paths to it, There's a bottoms-up path as well, which is driven by investors, where the institutional investors as well as intermediaries, they actually demand for strong governance and disclosure standards. And over time, the regulators codify them into practices, and which result in a robust market. So for us, in the context of the Maldives, the Maldivian capital market is quite young, as all of you know. We're just 2 decades in, but the foundations are in place. What we lack currently is activation. We need to bring issuers and investors to the table. We need to try and test our products. That's the only way we'll learn. We can borrow concepts, we can try to mitigate risks, but the context it applies to us may be quite different. So what we like to see is activation and learning from those experiences. There's a continuous approach we can do behind doors, upgrading compliance, governance, safeguards, processes, people, systems, to reforms to make the market better.
Thank you. Thank you, Manik. Ocean, I think we all agree on the amount of works the CMDA has done and is continuing to do. Let me now bring in Mr. Henrik Cruz. Mr. Cruz, with your broad international experience, it would be insightful to hear from you on this. Drawing on best practices, what are the core foundations
Hello. Good afternoon once again. Thank you for the question. The foundations for a resilient capital market. I think I already touched this in my speech about the risks associated to financial markets infrastructure. But before the risks, we need to have a legal framework that is effective. So the market participants have predictable set of rules to act as a participant in the financial market or in the capital market, and for the regulator as well. So there should be a clear statement of what is the role, what are the rules of the game in that particular jurisdiction. I must say that, for example, when we, as an investor, where I worked for 15 years, as an institutional investor, we contemplated the possibility to invest in a new market. The first thing we did was to study the jurisdiction, to try to understand what are the rules of the game if we go to invest in another country. So that's really something that we need to understand, because we should not be surprised for any kind of regulation that we are not complying just because we were not aware of it. The second one is the risk set of risks that I mentioned. I'm not going to repeat them, but any financial infrastructure needs to have a risk monitoring and a risk management and mitigation measures and recovery plans, so we can address the risks if they materialize. Third, for me, is easy access for the supply side. It should be easy and not that cheap for an issuer to issue a bond or a security in general and to list it in a market. And you can also think about incentives for the effort that the issuers need to take to make a new issuance, like, for example, preparing the information memorandums, the prospectus, the business plans, all the legal paperwork that needs to be prepared for listing. So that should not be too costly, otherwise there will be no new products coming into the market. For a market to function, you need not only the supply side, but you also need the demand side. And for the demand side, we, as institutional investors, usually like liquidity. Because if we go to invest in a market and to invest in some specific security, we as investors, despite being long-term investors, we need to have the trust, the confidence that if we have made a mistake on buying some security, we are able to sell it. Or just because we need to reallocate our portfolio because we are adjusting the risk level of our portfolio, we want to make sure that during this reallocation of money within the portfolio, we can trade the security. Because if we are stuck to that security, we cannot do investment management effectively. So liquidity is really a concern even for long-term investors. Maybe there is the idea that long-term investors are there for the long run, so they don't need to trade. From my point of view, that's wrong. Because long-term investors need to adjust the risk of their portfolio. So liquidity is very important. And to have liquidity, you need to have scale. I was just doing some math here before I wait for the question. Nowadays, the minimum ticket for a trade internationally should be around 10 million euros. 10 million euros is about 20 million rupiah for just one trade. So if you don't have scale, if you don't have liquidity to trade such an amount, international investors don't come to your market. So you end up just with MPAO. And let's be fair with MPAO. They cannot be the only player in the Maldives because they need someone to trade with. They have to play game with someone else. Otherwise, they will just buy and hold. And if they make a mistake, they are humans, don't forget that, they have no way out from that bad decision. If they want to adjust the risk of their portfolio, they won't be able to do that. So liquidity again, new players, scale is critical for a market as a foundation. And by the way, it was mentioned here about the options for the members of the MRPS, which is a good practice, by the way, to have different options in terms of risk appetite for the members. It is also a good practice for the so-called life cycle, because people that are young, they usually take more risk. That's what is theoretically correct. And those that are approaching retirement, they want less risk. But let's be honest, the opportunity set in the Maldives is so limited. You can't build different risk portfolios for your members because there is only treasury bills and some government bonds. So if you think about having new options for your members, think twice, because eventually we will not be able to implement it, because the opportunity set is really, really strict. And I'm saying this because I've been studying the market for a while. So yes, it is good practice, but careful. Be sure you can implement it. Then there is retail. Retail is also pretty important for a market. You have to offer instruments, financial instruments to attract households to your market, because retail gives you liquidity. Retail is a source of funding for your market, being it through the banks or to the insurance companies or to the pension office, the pension funds. So you need to offer retail, to offer households the possibility to participate in the market. That is a big challenge, because for that you have to think about literacy, because people need to know the minimum about how the market works. They have to know about what is risk diversification. So this is something that is requiring some study. But again, retail is a major player in a good and resilient market. And finally, costs, transaction costs. Not only issuance costs, but also transaction costs. It should be easy and cheap to trade. Otherwise, people won't come to your market.
Thank you. Thank you, Mr. Cruz. I think you have highlighted a lot about liquidity issue. Let's now look into this critical challenge for small and developing markets, liquidity. Mr. Aushin, I'd like to get you to take on this. How does illiquidity in the capital market affect the effective price discovery, and what implications does this have for investor confidence and market development in the Maldives?
Before I dive into the question, can I see a raise of hands just to understand how many of you have invested in stock in domestic securities, be it shares or debt instruments? Okay, that's 50%. We still have a lot of work to do there. So illiquidity obviously undermines price discovery. Obviously, even a small trade can distort valuations. And in the context of the Maldives, we see it quite clearly. Strong top-performing stocks like the BML and STO, they are all trading below their asset values. And this is not because of fundamentals. This is also because there's so little of their shares available for trading. We've gone to our market cap. It stands around 35 billion rupiah today. And if you look at the free float market cap is just over 3 billion rupiah. That means just 9% of the entire aggregated market cap is available for the public to trade between them. So that is very, very less in comparison to other frontier markets. So that is something that we can work on. We need to bring in more listings. And also, this inadvertently, creates a cycle, creates a loop. So limited free float means thin trading. Thin trading means issuers are discouraged to come to list, and the cycle keeps on continuing. So to overcome illiquidity, obviously there are several things we can do, but I'd just like, for the context of time, focus on three matters we feel that is quite important, which is utilization of the market, the ecosystem, and also policy drive. So on utilization, you can understand there was a presentation on the market. So you all know that just 9 companies are listed on the main board of the exchange. There's quite few. There's something that we can work on. And our largest sector, which is the tourism industry, the economic driver of the economy, is underrepresented in the market. Direct tourism is not listed on the exchange. So this, we were discussing with our team as well, just imagine the signal it will give to international audience as well if we bring a major resort IPO or a tourism-linked bond to the market. It's not only going to be a financing event, it's also about sharing and giving opportunity for the local Maldivians to have a stake on the leading industry in the country. We should all try to bring the sunny side of life to the market. That said, I would touch on ecosystem as well. Unlike other markets, there's a lot of other players that can play an active role in the market. We don't have underwriters, we don't have credit rating agencies, we don't have investment banks. So obviously there's room for more market players to come in and support companies and handhold them to the market. Also, something I noticed since I joined the exchange, and something that I've been personally also been trying to change, is how to make sure that the journalists cover more financial news. I mean, it's quite rare, or we can see a paid editorial on newspapers by advisors or issuers, but we don't see it covered as common as weather, for example. Yeah. So there is something we can all work on. And finally, and most importantly, would be the policy drive. I've seen it in other markets as well, like Iran. They have a different tier, which is a Securities Exchange High Council, which sits above the regulator and the market operator, which comprises of the ministries, the central bank, and industry leaders. So they all have this role to play in driving the momentum and, aligning the capital market responsibility. So I think that is something that lacks in the market, and that will definitely support liquidity, maintaining more liquidity, yeah.
Thank you, Ocean. I think before we go to the next topic, which is governance, I need to correct one error. 10 million euro is not 20 million MBR, it's 200 around. I need to correct calculations always. Thank you. That brings us to the theme of governance, which remains at the heart of resilience market. I'd like to ask Mr. Manik, if I may come back to you. The IMF's Global Financial Stability Report examined the interrelatedness of corporate governance, investor protection, and financial stability across emerging markets, demonstrating that sound corporate governance practice and greater transparency play a critical role in fostering resilient capital market. What specific reforms are most critical to meeting international best practices in terms of board structure, minority investor protection, and disclosure standards?
Thank you. Now, I think board structure and investor protection and minority investor protection in that sense, and disclosure standards are essential to any, I think, capital market disclosure or report that comes out. Now, good governance goes a long way, I think, in terms of establishing where you are, in terms of getting investor confidence. I think, like I said previously, without governance and transparency, capital market doesn't work. It is impossible to get, because you are basically asking public or institutional investors to put money there. Without governance, that is impossible. So there is a balance that we have to create with regard to, as Diragu CFO mentioned, I think for those big companies, that's not such a big issue. They have established what you call regimes to report as such. But we are finding it difficult to basically, not difficult, but struggling to come up with a balanced disclosure requirement for boards and governance requirements for people who come out on the board. Because institutional investors require, especially pension fund requires that they invest in good products, not just bad products or any product that come into the market. So there is a particular incumbent obligation on the part of the capital market players, CMDA, exchange, and the intermediaries, to basically come up with good products that can basically fulfill those conditions for institutional investors as well as other public to have confidence in these products, basically trust in these products to, for the market to happen. Now, CMDA CG code requires contemporary, the current listed companies also to have a certain minimum standard requirements in place. But what is important is also, I think we have to come up for capital market side. I've been basically saying this. Now, there is a concept of public interest directors, that the concept where directors are not there only because of its shareholder interests or, for that matter, company interest. It's a public interest director, that the concept. I'm basically promoting, I mean, this is not a concept new only to me, but this is publicly practiced in many places. So I think this is also essential to get the confidence in terms of what we can do to board structures as well as governance. So that's for the time being.
Building on that, I'd like to hear from Mr. Cruz, given your work with international institutions, how can corporate governance practices be promoted in both country level and firm level to help address information asymmetries in the market?
Hello. Oh, thank you for the question. There are some well-known instruments to improve corporate governance and at the same way to incentivize disclosure. One is through contracting. When we enter a loan, there is a contract with the bank, and within the contract with the bank, it is the bank that is in the poor situation because of information asymmetry, but the bank can include in the contract some kind of covenants where he requests for disclosure of information, not only about financial statements, but about other topics that may impact the quality of the loan. So this type of contracting can be used to improve not only disclosure, but also, at the end of the day, the governance of the company. The other aspect, the other instrument is the so-called compensation agreements, meaning that the shareholders make a contract with the management where it is stated what type of disclosure and what type of final objectives the company should pursue. So having this in the compensation agreement with the management, there will be some requests to report information about the evolution of the business. And you can evaluate if the management is aligned with investor strategy. The other tool is board of directors overview. You have executive management on a daily basis operation, but if you have a strong board that is asking you hard questions about how the business is going, that will contribute for good governance, but also for disclosure, because management will need to report to the board on a frequent basis, regular basis, about the financials and about the results of the business. Regulators as well, they play a role here because they demand information about the business, about the solvency of the market participants, about the solvency of the corporations that have securities listed in the market, about the capacity for them to fulfill their commitments. So regulators have a role here as well. Intermediaries, information intermediaries, meaning analysts, for example, they can digest financial information on behalf of investors and translating that technical information that is provided by corporations into accessible language, inclusive, forward-looking analysis about the corporation. So information intermediaries also is very important for this. There is another hot topic here, which is so-called threat of hostile takeovers. If a company is listed and is misbehaving or underperforming, it is exposed to a takeover, as long as the market is liquid, again. So because you are exposed to the threat of a takeover, you will behave. You will try to do the best you can, so you put away your competitors, you are away from a hostile takeover. And finally, I already mentioned the case of the venture capitalist that needs to assess financial information, that needs to assess the quality of a business, that needs to assess the quality of a business idea. So if you need some time to ask for money from outside investors, that will require from you disclosure, that will require from you reporting how are you pursuing good governance on your business. And finally, IPOs. IPOs are a critical moment about governance and disclosure, because it is the first time that you are going to be listed. So we need to convince potential investors that you have good governance, that you have the information organized to share with the market on a forward-looking basis. So IPOs are really a critical moment for everyone, for the company that is issuing securities, but also for investors that are looking for the first time to that particular company.
Thank you, Mr. Cruz. When speaking about IPOs and market participation, let's now shift towards the market participation and funding choices. Mr. Ocean, I think the MMS statistics show some interesting trends. According to MMS statistics, to the total lending by financial institution to the private sector and public non-financial corporation has grown into 4.3% in 2024, reaching up to 41.9 billion rupiah. However, in the same year, the capital market saw only 3 debts issuance totaling only 290 million rupiah, which is representing only 0.69% of the total lending activities. What do you think are the possible reasons why companies opt for traditional borrowing sources in the Maldives rather than the capital market?
I think that question was covered in other panels as well, and those are very interesting numbers. Obviously, it's not a very fair and straight comparison as well, because the lending figures actually capture a wide spectrum of activities: extended credit lines, refinance loans, maybe national level schemes, SME support schemes, and so on. And the market, what we're comparing to, is the private market segment, which is 3 years old. And it just matters what it brings to the table, the opportunities it has been creating for the issuers and investors. And going back to the question, why is this happening? Why is there a preference for borrowing through the banks? First and foremost, it's familiarity. The businesses are quite familiar, and the banks have been there for decades, so relationships and processes are well established. Second could be that private companies, family-owned businesses, are still not quite ready to open up for transparency and disclosure standards. That comes along with tapping the market. Third, scale is an issue as well, because very small companies, startups, might not be the most efficient to raise capital through the market, while the largest, biggest firms, they can, negotiate their terms directly with the bank. So those are 3 things that I'd like to add. And finally, but most importantly, there's a demand side issue as well. We as retail investors and as institutional investors, we still have a preference to keep our savings in general investment accounts, government securities. So there has to be a demand side shift as well, where we demand for corporate securities in order for the market to explore more offerings. I want just to give you a positive note, things are changing. With the private security segment launched in 2022, we have got a quite good momentum, and it's been creating more of a win-win situation, higher returns for investors, flexible financing for issuers, and also, diversification benefits even for the banks. They can actually treat them as syndicated lending. You don't need to go with the ordinary 70-30 split, equity 30-70 loan. You can, share that risk along with other institutional investors and retail investors. I've said it at multiple conferences that we are not here to compete with the banks. The BML, MIB are listed companies. They are very close with us. So we're always trying to work with them and other banks as well. So we are here to partner, and we are here to offer more dynamic, modern solutions for the Maldivian market. And just to add that right now what we're doing is we're drafting a medium-term strategic plan. We're asking tough questions internally, what's working, what's not, and what needs to change. And later on, we'll obviously extend this dialogue to other stakeholders as well. So what we believe in our view is that this shift will come with all of these internal processes and discussions with the entire stakeholders of the capital market. Yeah.
Thank you. Yeah, sure. Manik wants to add.
Just to add one point on that one, I mean, in terms of the capital market, and I think it's the obligation of, it's not capital market, basically the development of the country as a whole. So economic development, unlocking access to finance, and in the light of these things, I think we have to, like Aushan just mentioned, take a positive note on the fact that some banks have already started to have an investment portfolio. So why not other banks? I mean, banks have come into the capital market. They are not competitors. there are now basically complementary investment opportunities are available for banks as well. Some banks have already come in, and there are opportunities for other banks as well. So this is something I think we should note.
Thank you. We have been talking about sound disclosures and transparency about different market segments. So, Mr. Cruz, what specific risks do issuers and investors, particularly minority investors, face when participating in the private market with limited disclosures compared to the main market?
Hello. Again, I presented the risks of financial markets infrastructures which apply for both, for the main market and for private market. In private market with more importance because you do not have the capacity to exit your positions usually with so easily as in the main market. But I would say, thinking about mainly the retail investors, again, liquidity is key because retail investors, they buy and sell relatively often, and access, remember, the question is very practical because you don't have all, as a retail investor, you don't have all your money up front to invest in the market. You are investing your savings 1 month after the other. You save per month, you don't save upfront. So you really need to enter the market regularly because you only have the money as you go. So if you don't have liquidity, you don't have access. Second risk that is important, and sometimes it is forgotten, it is custody risk. Custodian services are usually the poor parent of the family because they are back office, so nobody sees them often. They are the backstage. But if custody services fail, it is really a big problem. Let's make just a case. Imagine that there is a bank that is safekeeping your assets, but instead of segregating the assets, it just puts the securities in the same account of its own. If the bank goes bankrupt, you will have a problem on identifying which securities are owned by the bank and which securities were owned by the retail investors. So segregation of the securities is a custodian service. So if it is badly performed, it could lead to the retail investor being stuck waiting for a court to decide which securities are for the bank for bankruptcy purposes and which are not. Another risk is the operational risk. And I will illustrate this risk with the Bitcoin wallets. If you buy Bitcoins, you have a wallet, you need to have access to a website. So you manage your wallet on your website. If the website closes and disappears, you're finished. So this is operational risk. If the website stops to work, you lost everything you had in Bitcoins. Bitcoins or other kind of virtual currencies. Then another important risk is, as we discussed, limited disclosure. As I explained, limited disclosure leads to short-termism because if you are not sure about the performance of an issuer, you just invest for the short term. So everything goes well in the short term, and then again you renew your position, but you are not incentivized to be a long-term investor because disclosure is limited. It leads to collateral demands. For example, in a relationship with the bank, if you don't provide enough information, the bank will ask you for collaterals as a guarantee of limited information. And if you have a company that doesn't have collateral to offer, it means that you don't get the loan. And at the end, it may eventually avoid the participation of retail investors, because if disclosure is so bad, information is so bad, people just don't want to participate. And finally, trust. Let me just share with you one event that happened in Portugal in 2014. There was a wave of issuance of commercial paper to retailers. So people were buying commercial paper at every agency of a bank, as if it was bank certificates. So people were not aware how to differentiate commercial paper from bank certificates. It happened that the commercial paper was not being issued by the bank. It was issued by a company owned by the bank that was non-financial, but it was marketed at the bank offices. So that non-financial corporation went bankrupt, which means that commercial paper defaulted, so the retailers went bust, and they were starting complaining against the bank. And the bank said, this is not my loan, this is for that company. But the retailer said, we don't care, we bought the commercial paper from you. So, of course, these went bad, they lost their money, so nobody wants to talk about commercial paper anymore. So it became a bad product in our market. It took a long time for people to come back to buy commercial paper just because of this. So trust is really critical for retailers.
Interesting point on trust and disclosures. Let's now turn to the vital role of intermediaries. Mr. Manik, I'd like to view from as a regulatory standpoint. Financial intermediaries play a vital role in the capital market, from pricing and advising of safeguards of investment. These are central to maintain market integrity and investor confidence. What policy, regulatory, or institutional measures can the Maldivian financial services sector adopt to ensure that intermediaries consistently uphold the high standards of professionalism and risk management?
Thank you. As you know, I think the market is basically regulatory services plus the intermediaries and advisors and all of us combined. I think one important thing that we have to remember is, as far as the CMDA goes, one thing is that we first have to basically accept that regulatory strengthening and supervisory oversight needs to be what you call enhanced or improved. Now, there are challenges when you take on these sites. Now, since members of parliament are also here, I think I should make that comment. Now, there are basically budgetary constraints to that angle as well. So when the market basically expands, there is a burden on the part of the regulatory services to improve itself. Otherwise, we don't keep up with the market. There are several things that are happening in the market that we are unable, let's be honest, to say, to cope. Because Shuhad just went very lightly over one aspect of the whole thing in the morning. And I mean, we were caught unawares of what went through here. And some of the people that did this just, I don't know where they are, scot-free here. I mean, so these type of challenges are there. I think we need to keep in mind. And we need to collectively basically think the whole thing through. Empowering basically regulators, empowering the exchange, depository, advisors, all these things play a big role in terms of how well we function in the market. That's one thing. The institutional capacity building is also one thing. It basically plays into this one. And when you empower, you need training, what you call
staff upgrades. So these type of challenges are there as it is, as far as where I'm staying now. Then from the other external side, I think enhanced transparency and accountability is what the institutional investors are basically demanding of the products that are coming into the market. So for that to happen, I think the market also needs to get together and find a way basically to get that into place in terms of disclosure requirements of the institutional investors and how the product is basically coming into the market. Then I think we have to keep in mind the fact that market conduct and enforcement is also something that we need to keep in place. Currently, the enforcement is with CMDA, but we have to think of basically the current practice of enforcement versus the what you call the new enforcement regulatory requirements that can come into play, like risk-based supervision versus compliance sort of thing that we go through now. So we just keep on ticking some of these things, but it may end up not being the best system that we may have here. So these are some of the problems and challenges that we have here, and that these things need to be improved, certainly in terms of placing the capital market in a better footing.
Thank you. Thank you. And I think, like Mr. Cruz, your point as someone who has worked with intermediaries directly, from the perspective of financial intermediaries themselves, what concrete actions can be taken to elevate professionalism and ethical standards across the Maldivian financial services industry?
Intermediaries, in my view, they need to be interest-aligned with the market infrastructure. What I mean is that, in my view, desirably, financial intermediaries should be shareholders of the stock exchange. I don't know your thoughts, but let me just explain with my case. I started my career in a stock exchange, which at the time was a kind of a cooperative. So the banks cooperated and were the shareholders of the stock exchange. It grew, so they started growing the listings, they introduced the electronic trading system, then they introduced the derivatives branch of the stock exchange, so it became successful, and Euronext decided to take over the project. So they started negotiations, and the banks ended up selling the infrastructure of the stock exchange to Euronext. But they kept a small other local stock exchange. It is not important for the case. So basically, Euronext Lisbon is the stock exchange today. What happened is that liquidity just reduced dramatically. New issuance of securities disappeared. And everybody complains that the Euronext Lisbon is a very small and peripheral market in Europe. My reading of that is that once the banks sold their positions, they are not shareholders of Euronext Lisbon anymore. They stopped originating issuance of securities. Investment banks were the major originator of listings those days, and also, of course, they were also a very important player on attracting money from retail investors. So once they are not part of the game, let's say that way, Euronext Lisbon was just a small part of Euronext Global. And the Portuguese market just almost disappeared. And there are several tentatives to restart all this, but for me, this is my personal opinion, the fact that the banks are not anymore aligned with this project means there is no origination and there is no retail money being collected, so the market suffered because of that. So this is to say that intermediaries are really a major partner. They can also attract foreign investors. If you start marketing your market by just issuing analysis, reports about your local market internationally, if you do some kind of specialized articles in international newspapers, so all of these can be done by intermediaries. Market coverage of each company by analysts is very important to sell the product to international investors. And finally, give easy access to retail investors. There is a very interesting project, a successful project in Africa called M-Pesa. It's a project with Vodafone. M-Pesa is a wallet, a mobile wallet, that allows you to make payments and to do transactions on your mobile phone. And everyone in Africa has a mobile phone nowadays. So M-Pesa is the most inclusive instrument for attracting retail investors to the local capital markets. So again, technology, capillarity are those very important factors for inclusiveness of retail investors.
Thank you. I think we'll touch on technology. But before I move into the next question, I'd like to remind our audience that you can pass your questions through the barcode on the table, and we'll come back to the audience questions after the question. Let's now touch on the technology, which is transforming markets globally. Mr. Ocean, to develop a capital market that is efficient and liquid, the development of high-quality market infrastructures is essential. How can technology be leveraged to enhance market process and efficiency, and what are the challenges emerging markets face in adopting it?
Technology, I think I've touched on it before as well. Technology has definitely transformed how our market operates even now. And there's no debate. Strong digital infrastructure brings transparency, reduces costs and broadens access, and we've seen it in our market as well. So with technology, the most beautiful thing is data. So obviously we get access to data. So this is something that we've been working for the past year, working to deliver more on trading information, trading analytics that will actually,